developing a similar application with kites. We have been following also developments in hydrogen. So at the moment, hydrogen fuel seems like a good option, a possible option when it has been developed and when it becomes economically viable. And we have Vestas, for example, the world's largest turbine maker, developing some ships that will be able to run on hydrogen in the near future.
Coming up, rising sea levels means humans need to get creative when it comes to coastal defenses. But how do we protect both ourselves and the environment? One Israeli startup may have the answer. That's coming up next. This is Bloomberg Green. In London, I'm Anne-Marie Hordern. This is Bloomberg Green. After water, what's the resource that humans use the most? It's concrete, 3 tons a year for every person on the planet. And engineers estimate it's used twice as much as all other building materials combined. And it comes with a huge environmental cost. Concrete, not just in cities, it's a common feature on our coastlines too. And that's taking a toll on biodiversity. But one Israeli startup has found a way of making sea defenses stronger and encouraging life to thrive.
If you take a look at concrete structures like breakwaters or seawalls, the water around them is often clear. That's not actually a good thing, because it means there's no life. Marine species are actually most abundant in coastal areas, but it's also where us humans prefer to live too. So when we build here, we drive away marine life.
Concrete in the marine world has a lot of additives, a lot of chemicals, and some of those materials are actually leaching out, and they're actually prohibiting marine life to thrive. If we keep developing without any regards to natural communities, there is a tilting point from which beyond we cannot really go back.
In the coastal city of Tel Aviv, an Israeli startup wants to revolutionize our urban coastlines. Their sea defenses are transforming lifeless man-made structures into teeming ecosystems. They do this by replacing standard concrete with their own special cement formulas.
As opposed to regular cement-based concrete, e-concrete includes certain elements that enhance the growth of marine flora and fauna of plants and animals. Our admix, which is kind of our secret sauce, is basically kind of sealing the concrete, making it less aggressive for the marine environment. That once we add it, we enable life to flourish.
In the lab, the team run tests to identify what mixes will work best for marine life.
So we take really ice cube sized concrete slabs of different compositions, and we put larvae, 20, 30, 50. We need to have a lot of replicates. We're geeky scientists, so we have to have a lot of replication and controls. And then within a few days or just a few weeks, we can get an answer on their preference. So obviously, if they die, they have a very low tolerance to that specific concrete mix design. And if they thrive or they flourish, we can quantify that very quickly.
E-concrete says it typically sees double the biodiversity of regular grey concrete. From fish and sea caterpillars on their armour blocks to crabs on these tidal pools that sit on the shoreline.
This unit holds water during the low tide, so it's always moist, and therefore it has a very comfortable habitat for crabs and sea anemones and sea stars, etc. These pools have been here for less than 3 months, and this is already what you can see. It's covered with life. See, the rock around it, which has been here for probably 10, 20, maybe even more years, only has a thin layer of green algae, and that's it.
As well as the composition of the cement mix, eConcrete designs its products specifically to the marine environment it will be deployed, to create niches for endangered species, or to develop nurseries like these oyster beds. The final part of the equation is creating complex surface textures to mimic natural rock or coral, an environment that helps anchor young organisms.
When concrete elements are being cast, the typical goal is to have a very slick surface, very, very smooth. The idea is to get the water to flow right across it. When we're designing eConcrete with a rough surface, we want to do the complete opposite. We want to slow the water when they are crossing the structure so that the larvae can actually adhere and attach to the surface.
eConcrete has to offer its clients more than just ecological credentials. Over time, they've discovered that creating hospitable habitats for marine life adds another advantage, one that is surely hard to ignore.
We've seen evidence to the fact that the growth of the organisms on the concrete create kind of a layer of defense. Just the addition of weight, we can actually gain stability and strength over time.
This is let's say the unit when we put it in the water. And this is after a year in the water. And what you can see here is all the oysters are completely covering it. We designed the units so they can withstand the forces and perform in terms of structural performance, but they can also be a backbone for ecological enhancement.
The company tests its miniature designs in tanks full of real seawater, rocks, plants, and animal life from around the world.
What we're looking for is the accumulation of calcium carbonate on the surface of the concrete of different mixes and different designs. This is the process that we call biogenic buildup. So with time, we get a buildup of calcium carbonate that is sourced from marine organisms on the surface of the concrete. And we actually encapsulate the concrete with a natural rock. So when the organism die, in case of a coral, it will die, and then another coral will sit on it, and that's how a reef is growing.
The hope that our man-made structures could become stronger over time also means better economics. The units require less maintenance and could therefore stay in the water for longer. eConcrete, though, is just a few years old, so it needs more time to really quantify the longevity of its products. But the company are certain their products are better for the environment, and not just in terms of improving biodiversity.
We're kind of trying to offset some of that immense carbon footprint of the concrete industry.
Construction is responsible for about 11% of global carbon emissions. By adding a biological crust to their products, eConcrete prevents some CO2 from being released into the atmosphere.
For every kilogram of calcium carbonate being created by those marine organisms, we're offsetting 120 grams of CO2. So think about building a port infrastructure or a city waterfront that is an active carbon sink. I think that's a great advantage of the technology.
That does it for this week, but let's keep the conversation going on Twitter. Follow us at Climate. I'm Anne-Marie Hordern, and this is Bloomberg Green.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We've got the Dow higher, the S&P, NASDAQ, both lower as we await the latest Fed minutes. S&P down 18 now, dropped there of 0.4%. The Dow is up 81, at a record, up 0.2%. Very different story for NASDAQ, now down 220 points, a drop there of 1.4%. Tech stocks extending the sell-off. Yields stay elevated. Right now we've got the 10-year yield 1.68%. Spot gold is up 0.5%, $18.23 the ounce, and West Texas Intermediate crude oil up 1.6%, $78.25 a barrel. As for market expectations for Federal Reserve rate increases this year, Cara Murphy is Chief Investment Officer at Kestra Investment Service.
So right now, market's expecting 3 rate hikes this year. We think that they're probably not going to get to all those 3. Number one, the market has a really terrible habit of overestimating the pace of Fed tightening. But also we think that goods inflation will really start to slow down the second half of this year. That will give the Fed a little bit more room to kind of take their time with this.
Murphy was interviewed ahead of the release of those Fed minutes. So right now we do have the 10-year yield at 1.68%. GM CEO Mary Barra is showing off the company's electric Chevrolet Silverado at the CES exhibition, announcing that the pickup will go on sale in the spring of 2023 to compete with battery-powered trucks from long-standing rival Ford Motor and newcomer Rivian Automotive. We will have an interview with Mary Barra coming up just about 30 minutes from now, right here on Bloomberg. Again, recapping, stocks are trading mixed. We've got the S&P down 18, lower by 0.4%. NASDAQ down 1.4%, lower by 222 points. Dow Jones Industrial Average up 70. That is a gain right now of 0.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Yes, indeed, everyone. It's a Fed Wednesday, not a Fed decision to be exact, but those latest minutes from that last meeting of 2021, that December 15th meeting. And we are just seeing some headlines crossing. Looking at our live blog, in terms of the views on a timing of a balance sheet shrinking, they were diffused with the likely timing of the beginning of the removal of policy accommodation considered closer. Market participants began to discuss how balance sheet policy might feature in the committee's plan for reducing accommodation when warranted, although expectations for the timing of the first decline in the balance sheet were diffuse. There's our new word.
Diffuse, yeah. Well, the word transitory does appear in the minutes once. It's on page 11, Carol, and it says, as elevated inflation had persisted for longer than had previously anticipated, members agreed that it was appropriate to remove the reference to transitory factors affecting inflation in the post-meeting statement and instead note that supply and demand imbalances have continued to contribute to elevated inflation. One thing I want to point out here is this is from December 14th and 15th, as you mentioned. Right. That was about a week before the Omicron variant absolutely overtook the United States. Look where we are now. I mean, we're seeing hundreds of thousands of new cases each and every day. The Fed saying the Fed that this was they didn't say this Omicron altering the view of the economy.
Right. That was back in December. Yes. But what's interesting is it does, and we'll dig into this, it does mirror what we've heard from a lot of our own team who watches the markets and also from outsiders who say we've got to kind of look beyond and through COVID. Participants also saw supply issues lasting longer, and that I feel like we've seen that as well. It is Interactive Broker Studio. That's where we are broadcasting from. We are also on YouTube. It is Bloomberg Business Week for this Wednesday, January 5th. Lots to come. Over the next couple of hours, we're going to hear from GM CEO Mary Barra. We're also going to get the Bloomberg Big Take, which is about the big automakers overtaking Tesla and Elon Musk specifically, Tim.
Yeah, also this week's Bloomberg Business Week cover story. This is a good one. Jessica Simpson is wrestling back her billion-dollar fashion empire. A deep dive into how she was able to get back her name and fight for it.
Exactly. A little CES, a little Strava, and a little bit about talent representation. It's all to come.
Focus on the Fed is brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with the solutions they need to grow a thriving business. Commonwealth, go where you grow. Visit commonwealth.com to learn more.
Let's get to the Market Drivers Report. Let's set that business week agenda. Lots going on. I am seeing yields moving up following those Fed minutes. Vince Signorella, global macro strategist at Bloomberg News, on the phone in White Plains. Yelena Shaletyeva, senior U.S. economist at Bloomberg Economics, on the phone from Long Island, New York. Lots to get to, guys. We're going to run through a lot quickly. Yelena, first of all, what's most important here from those Fed minutes in your view?
Yes. Hi, Carol. So I think the discussion about the balance sheet contraction, eventual contraction, is really interesting. There's a variety of different views, but one thing I think is clear that we will see the removal of accommodation through the shrinkage of the balance sheet will come much earlier than, in the previous episode back in 2017. I think it's important to note that conditions right now, economic conditions, are significantly different from what we saw back a few years ago when the Monetary Policy Authority started shrinking the balance sheet. Obviously, GDP growth is higher, inflation is obviously way higher, and that will warrant a significantly faster removal of accommodation via the balance sheet. But it's still unclear how they want to do that.
Right.
I don't see the word asset sales in the minutes, so that means that they will probably allow a passive shrinkage of the balance sheet when the time comes.
All right, good to know. And I just want to point out market reaction because we did see yields move up following those latest Fed minutes. I just want to take a quick check on that 10-year now with the yield of 169. The 2-year note, looking at the shorter end of the yield curve, which was about 0.80, now at 0.81. So just a little bit of a move up. And in terms of the equity markets, we're also seeing equities move down just a hair. The S&P was down about 17, now down about 24. The NASDAQ, which we've really seen a lot of tech selling, was down about 220, Tim. Now it's down about 245.
Well, let's get more from Vince Signorella, global macro strategist at Bloomberg News. Vince, same question to you. What's the most important thing we should be focusing on from the release of these Fed minutes? What hits your mind?
I think the idea that what traders were looking for going in was, and recently Powell made a statement at a press conference that hikes could come much closer to the end of taper, and I think that's what we're getting out of these minutes in general. That looks like why the dollar is bouncing and yields are climbing. We're approaching 1.7 on the 10-year at the moment, and the 2-year just hit the highest yield in about 10 months. So it's across the board. Stocks fading. We've only got about a dozen points in the green for the Dow. All the other major averages in red. Doesn't look like that's going to actually hold going into the end of the day. The markets in general have just gotten their idea around this fact, and I was always surprised why it took so long. The Fed is going to have potentially 3 rate hikes and potentially 4 next year, depending upon the recovery and depending upon how fast the variant passes. And we're just seeing it in pricing finally catching up to the theory.
Right, exactly. We've seen that trade certainly in the Treasury market. And you mentioned 170. It does look like we hit 170 on that 10-year note. And as you, right, it's just right at it. And again, that I'm looking at the 2-year just continuing to climb, which makes sense, the shorter end of the yield curve. All right, so gosh, really quickly, Yelena, 20 seconds. What does this mean for the jobs report? What should we be thinking about?
Well, I think in the jobs report, we will be looking at the unemployment rate and basically how quickly we are approaching full employment. I think it's important to know that I think the FOMC really think that we are right at or very close to that point. So I think that's an important one. Okay. Maybe even more important than the pace of payrolls.
All right, good to know, guys. Wish we had tons of more time. Thanks, Yelena Shaletyeva and Vince Signorella.
Let's do the Bloomberg Business Week Bite of the Day. It's one number that tells us a lot. Today's number is 10 billion.
Yep, one of the richest gaming billionaires has had one of the world's biggest wealth plunges. Forrest Lai, he's the chairman and CEO of Sea Limited, has lost $10 billion of his fortune since the ADRs of the company peaked.
back in October, according to the Bloomberg Billionaires Index. The latest blow coming yesterday when Tencent Holdings cut its stake in the gaming and e-commerce giant, driving the stock to its worst slump in almost 2 years. Folks, we are seeing an impact certainly in those yields. They are climbing, and climbing. I'm looking at that 10-year note. It is definitely above that 170 mark.
All right, more on that in a few minutes. In the meantime, a check of the latest world and national news with Nancy Lyons in Washington, D.C. Good afternoon, Nancy.
Thanks, Tim. The labor gap that the U.S. is experiencing is now expected to last long after COVID is gone. We get more on that from Bloomberg's Amy Morris.
Job reports show a shrinking labor force with potential employees kept on the sidelines or retiring early. Bosses, desperate for new hires, are driving wages up and giving inflation-wary officials at the Federal Reserve something else to monitor. And now we're learning that these labor shortages will likely persist. A combination of slower population growth inside the country and fewer migrants arriving from outside show that companies could have trouble filling entry-level jobs for years to come. In Washington, I'm Amy Morris, Bloomberg Radio.
Authorities say 13 people died, including a number of children this morning in an apartment building fire in Philadelphia. The blaze happened in the Fairmount section of the city. Philadelphia Mayor Jim Kenney calls it tragic.
Please keep all these folks, and especially these children, in your prayers. Losing so many kids is just devastating.
Kenney calls it one of the worst days in the city's history. Attorney General Merrick Garland this afternoon will be providing an update on one of Washington's worst days. Garland will discuss the Justice Department's investigation into the January 6th insurrection on this, the eve of the year anniversary. And announcing the address, the department says in a statement, Garland will update the American people on the department's efforts to hold accountable those responsible. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. We want to take you back to the markets because we're definitely seeing reaction, particularly when it comes to treasuries extending their slide if the Fed minutes flag a rate hike pace. This was something Michael McKee said will be really key. What we're focusing on is if we get more insight into what the Fed might do, how they might do it, when, what the pace will be. And you take a look at the 10-year note, it is 170 right now, and it has just taken a straight shot up, taking out the 168 level following those FOMC minutes. If I look at the shorter end of the yield curve, of course, going to be the most sensitive in terms of what the Fed might do. We're looking at a yield of 0.82, so straight to the upside. I mean, the story so far in 2022 has been about the Treasury sell-off and the yields really finding a new level, and we'll see where they settle in. Does the 10-year go above 2? We'll see.
Yeah, we'll see. And look, this also hitting the equity market, Carol. We're seeing S&P 500 right now at session lows down about 0.7%, certainly taking a tick lower after the release of those meeting minutes.
Yeah, S&P was down about 17 just before the FOMC meeting minutes, I should say that 5 times fast. It's now down about 33 points. The NASDAQ, which was down about 220, now down about 275. So what did we get? What was the word that everybody was using that's saying that there's kind of diversity in thought?
Yeah, and there's
in terms of what to do with the balance sheet and rates.
Certainly a big takeaway was the Fed minutes flagging this chance of an earlier, faster rate hike. And that's certainly a big part of the takeaway today. As we mentioned, Treasuries dropping. Traders reading this as hawkish. The 10-year yields, as Carol told us, just hitting their highs of the session in the wake of these minutes released. Once again, December 14th through 15th meeting of the Federal Reserve.
Yeah, kind of fascinating. Diffuse, I think, is the word that they were using. The views on timing of balance sheet shrinking were diffuse. We've talked so much about, in terms of the balance sheet and the asset purchases, that needs to happen before you can start to do, rate hikes. That would be normally expected. Last time around when we saw this was back in, I think, 2017 or so. It was about 2 years between what was going on the balance sheet before we saw interest rate hikes. The expectations is that it would be faster, and that's exactly what we seem to be getting. But stay tuned, everyone. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks are at the lows of the session. Federal Reserve officials say a strengthening economy and higher inflation could lead to earlier and faster interest rate increases than previously expected, with some policymakers also favoring starting to shrink the balance sheet soon after that. That word coming in the latest FOMC minutes. The rout in tech shares is continuing as rising Treasury yields fuels greater concern about growth and profitability. Right now, we've got NASDAQ down 294 points, down 1.9%. The S&P 500 index is down 37, lower by 0.8%, just about the lows of the day, while the Dow is down 80, a drop there of 0.2%. 10 years down 15, 30 seconds. 10-year yield now 1.69%. Spot gold up 0.1%, 18.16 the ounce. West Texas Intermediate crude up 1.3%, 77.97 a barrel. Bitcoin now down by 1.1%, 45,710 on Bitcoin. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So we're keeping an eye on the markets because we've definitely seen yields move up and stocks intensify, especially when it comes to the tech sector in particular. They're selling after those latest Fed meeting minutes. We'll talk about that in a little bit. Basically, the Fed said a strengthening economy and higher inflation could lead to earlier and faster interest rate increases than previously expected. So that is why we're seeing the market trade. In the meantime, we're watching all those COVID headlines.
Yeah, we are. Rio de Janeiro canceling its world-renowned carnival, street parties for the second straight year as a new wave of infection spreads throughout the Brazilian city. Here in the U.S., Ivy League universities Yale and Princeton said they would limit student travel and impose testing requirements to curb the spread of the Omicron variant. But I don't need to tell our audience any of these headlines because they know from their own personal behavior the way that Omicron is affecting their lives.
Yeah, exactly. And a big one, too, is what Hong Kong is doing. They're going to ban flights from 8 countries. That includes the UK and the US, shut bars and gyms for a couple of weeks to curb that spread of the highly infectious variant. So, like many of us as we go through the pandemic, our next guest has been shaped by our own experiences with healthcare, looking to make changes. She is Sigal Atzmon. She is founder and CEO of Medics Global, on the phone from Tel Aviv, Israel. Sigal, good to have you here. How are things in Israel?
Hi, Carol. Thanks for having me again. Well, Israel, as is America, is currently in the midst of another huge wave with this Omicron, hitting us all, I guess. But the thing is, although the Omicron seems really milder, it is really getting wilder. And yes, if I look and put it in perspective, less people will get badly sick, but still people will die and people will be hospitalized.
Connection lost.
We see it in Israel, we see it in Europe, we see it in the UK, and we see it in America.
What's the right approach here? We know that the appetite for lockdowns, at least here in the United States, is not very big. But it's interesting to see the news from Hong Kong, as Carol mentioned, banning flights from 8 countries, the UK and the US included, and shutting bars and gyms for 2 weeks to help curb the spread of this. Is there any evidence that that will work? Or do you, at this point, it's so contagious, do you just have to let the virus run its course?
In all honesty, and again, by looking as a company that works on the ground in over 90 different countries, I think it's time we put behind us the whole story of forcing people to get vaccinated, putting down mandates, and having the government zigzagging left and right with going to test or not to test. Right now, we need to change the way we approach the management of this pandemic. And right now, I feel that the ones who have gotten vaccinated will continue to do so. The ones who haven't and didn't, they won't do it, and it's game over. So now we need to focus really on the next phase, and that is preparation. So get your health better, your body, your mind, exercise, eat well, protect yourself. It's about preparation, then prevention. Get vaccinated, wear your mask, social distancing where you can, and rehabilitation. How do we actually get people over it? Get better with good medical outcomes. And the good news is we have the vaccinations, and Carol, we have treatments. We have the COVID pill, right?
Right. The toolkit, like we have so many more things to play with than we did back certainly in the early days of 2020. So, one thing I do wonder, Tim and I talk about this a little bit off air, it's carrot stick. Like, what about forgive me, everyone, and maybe this is a little provocative, but do you somehow penalize those who've said, I'm not going to get the vaccine, but maybe there's something, because this is such a community-based virus, that it's not just what you do that just only impacts you, it impacts your community. So is there some punitive measures that we need to be thinking about because of that?
I think we're way beyond that.
Okay.
Green passports should have been implemented a long time ago, but again, that is beyond the stage. Right now, this is so transmissible. Everyone is going to be at risk. So we need to improve our communication. We need to be more consistency. The government has to fix its procurement issue with the testing. People should be able to get tested if they have symptoms. This cutting down of the staying at home needs to be sorted. And I think we need to move forward into testing, staying at home, and getting home care treatment, right? So I don't think there's punitive. I don't think we can go against 40% of the population. You know, America has constitutional freedom. People are allowed to choose, and the government cannot force anymore. What we do see in America and in other countries is corporates, employers, and the people who are taking the power in their hands and making decisions. And it depends where you work, who your employer is, and how you're going to manage your personal risk and your community risk. But you said very importantly, it's a community-driven issue. But the communities impact the states, and the states, being next to each other, impact us at national level.
Well, I'm wondering what the role is for companies in this and the return to the office. If you don't think that mandate should be a tool that the U.S. government uses, what about when it comes to the corporate world and requiring boosters, for example, to come back to the office?
I see more and more corporates around the world, and in America included, that say, if you're not vaccinated, you cannot work for us. You cannot return to the office.
Is that the right approach?
Unless, well, I think it is, but people have the choice. I want to work with a company where I have to get vaccinated or not. They can get other jobs. Not every corporate imposes a vaccine mandate. But I do think, and that's what we see on the ground, more corporates are saying it's not about what the government is saying, it's about how we run our business, how we're going to protect jobs, how we're going to protect supply chains, how are we going to keep that inflation down or under control and the economy running if we don't have people coming into work.
Yeah.
Right?
Well, fingers crossed.
We need to keep a balance.
Yeah, no, you're right. But it is tricky, and I guess we keep thinking 6 months from now it'll be that much better, and 6 months, and here we are.
Carol.
Exactly. Sigmal Atzman, she is founder and chief executive officer at Medix Global, on the phone from Israel. This is Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, you are listening to Bloomberg Business Week on this Fed Wednesday. Fed Wednesday because we just got the latest FOMC meeting minutes from that last meeting of 2021 that was back in mid-December before Omicron really hit some of its peaks. But we are seeing certainly equities lower as a result, and we're seeing yields. Definitely, they have moved up as a result.
Yeah, stocks trading at their session lows. Hey, in just a few minutes, we're going to hear from General Motors CEO Mary Barra. But in the meantime, we are going to hear from Mr. Charlie Pellet with a check of the latest.
Thank you very much.
The markets. Hey,
Here's what's going on, Tim. GM shares, they are lower right now, 2.7%. Rest of the market lower as well. As Carol mentioned, lows of the day right now. Right to the numbers, we'll give you the why and a little more color on the FOMC. S&P down now by 41, drop there of 0.9%. NASDAQ now lower by 310 points. That is a drop of 2%. The tech slide continues. The Dow is down 92, drop right now of 0.3%. Again, the 10-year, 1.69%. Federal Reserve officials say a strengthening economy and higher inflation could lead to earlier and faster interest rate increases than previously expected, with some policymakers also favoring starting to shrink the balance sheet soon. Lots of questions about interpreting CDC guidance concerning when and for how long a person is most likely to transmit the highly infectious Omicron variant. Dr. Bhakti Hansati is Associate Professor of Emergency Medicine at the Johns Hopkins Bloomberg School of Public Health, and she says, here's what you need to know.
If you are symptomatic, given the current pandemic, you should isolate for the full 10 days. Because what is also known is after 5 days from your onset of symptoms, most people will be uninfectious, but about 31% of individuals will continue to be infectious, and there is a risk that they will continue to transmit the virus onwards.
Dr. Bhakti Hansati, Associate Professor of Emergency Medicine, the Johns Hopkins Bloomberg School of Public Health, is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Among vaccine stocks right now, Pfizer up 3.5%. BioNTech, its German partner, its ADR is down 3.9%. AstraZeneca up 0.2%. Moderna is down 6.3%. Johnson & Johnson up by 1%. Spot gold up 0.2%, $18.17 the ounce. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Charlie, of course, breaking down the markets because we are seeing reaction to those latest Fed meeting minutes. I can't say that. General Motors, though, certainly in focus. We've been hearing from U.S. automakers, global automakers, about U.S. auto sales over the last couple of days.
Yeah, and look, also I think a lot of questions, too, about what the supply chain looks like for 2022 and what the chips look like for 2022 and to what extent the U.S. automakers are going to be able to navigate that complex path.
GM popped on expectations that it may not be too bad. The stock was up 7.5% yesterday. It's down 2.7% today. They've been making some announcements at CES as well about their, participants in the EV race, because that's a big thing.
Oh, it's huge. It's not just Tesla these days. Of course, you have Ford and General Motors, and they're going all in on it.
Yeah, we're going to talk about that a little bit later on. Our Bloomberg Big Take is about Toyota, Volkswagen. They're going after Tesla. They're going after Elon Musk when it comes to the EV race. All right, we mentioned General Motors. The stock is up already about 9% so far this year. Some optimism. Right now, our David Weston, Bloomberg Radio and Bloomberg TV, getting ready to sit down with GM's CEO and chairman. We're talking about Mary Barra.
Audiences worldwide. I'm David Weston, joined by my colleague Romaine Bosnick, and we welcome now the chair and CEO of General Motors. She is Mary Barra, coming to us from Detroit. Mary, congratulations. We've all been waiting for it, the Silverado. I've been asking you about it. You finally announced it. So I guess my questions are, when can we get it, and how fast are you going to be producing them?
Well, we're going to bring them to market as quickly as we can. We anticipate that we'll start with the work truck variant, and that will be available in spring of next year. And then in the fall, we'll have the RST, and we're going to work to get them to customers as quickly as we can. And the reception, I have to tell you, David, has been great. The first edition of the RST sold out in 12 minutes, and reservations are still coming in. So we're super excited about the response that we're getting, because this is a ground up EV truck that has so much capability. We're so excited to share it with the world.
So, Mary, congratulations on all the people ordering already. There's the demand there. At the same time, as you know so well, you're a year or so behind where Ford is with the F-150. How are you going to catch up? And maybe as important, is it important for General Motors to catch up with Ford when it comes to the full-size pickup?
Well, you know, David, when you look at the EV race, we've already had the Bolt out for several years, and now the Bolt EUV. We're shipping Hummers right as we speak. The Cadillac Lyriq will be out in just a couple months, and then early next year, we're going to have not only the Silverado, but we're going to have next year the Chevrolet Blazer EV, EUV, or SUV, as well as the Equinox. So I am so excited about all the electric vehicles that we have coming, and that's why I'm so confident by mid-decade, we will be the leader in EVs with the battery plants we have, with the assembly plants, the volume segments of the market. We are going for total leadership here.
Mary, with regards to the accessibility of some of these vehicles, not just the vehicles that GM makes, but a lot of your competitors, these are still relatively expensive vehicles that could sometimes cost $50,000, $60,000 or more once you get them fully loaded here. When do we get to a point where we see a little bit more price accessibility so that we see a little bit broader adoption of EVs?
Well, I think that's why it's so important that we've got the Chevrolet Equinox EV coming out, because it is so important to get, to your point, into that affordable part of the market. The $30,000 to $40,000 is a huge volume segment, and that's exactly where we're targeting the Equinox, and it's going to be nicely equipped. When we reveal that shortly, just not too long into this year, people are going to see just how much value they're going to get for that starting price of $30,000, and I think that's when you're going to see that huge adoption, especially with the work we're doing to make sure that there's adequate charging. So I'm super excited to get those affordable EVs into the marketplace, because as you know, at General Motors, we really want to bring everybody in.
And we know that a big part of making this more affordable is, of course, improving the drivetrain, improving the batteries to the point where they are a little bit more economical to produce, and as a result, that brings down the cost of the car. How far along are you in GM's development of that technology and of that battery manufacturing, where you can have some confidence here that the price can come down meaningfully for consumers?
Well, we have that confidence. When you look at the previous generation battery technology we are using on the Bolt EV and EUV to what we're launching with Ultium, first with the Hummer, then with the Lyriq, then with the Silverado, the Equinox, and the Blazer, that's coming on our new generation of Ultium technology that is already 40% less expensive than what we have with the Bolt. And we believe by mid-decade that will be 60%. And we're continuing to work with a number of different technologies and with partners to make sure that we're going to have leading edge costs from a battery perspective, which allows us to have the portfolio. And then scale will help as well. And that's why the Ultium platform is so important, because whether it's the Equinox or the Hummer, we're taking it off the Ultium platform, and that's giving us tremendous scale, which also drives costs down.
Mary, as you said, that Silverado behind you there, for those of you watching on TV, was built from the ground up for an EV vehicle, and it was based on the Ultium platform, which allows you to do a lot of things flexibly that otherwise you might not be able to. But talk about the supply chain, because that's something we've all learned to talk a lot about over the last year or so. What have you done to ensure that you can have the supply chain for the volume of EVs that you want to produce and sell?
Well, we've made a number of announcements already. We have more coming, because I think we're going to be one of the most vertically integrated automakers when you look at what it takes to make sure we have all of the, whether it's the precious metals or the raw materials necessary to build EVs. And we're securing all that. We'll be continuing to make more announcements, and we want to make sure that we're never constrained by battery capacity. Also remind you that we already this year will begin manufacturing cells with our joint venture with LG in Ohio, and we have another plant underway in construction in Spring Hill, Tennessee, and more to follow. We'll have another announcement yet this month.
Mary, just spend a moment, if you would, on BrightDrop, something that maybe some of us haven't talked much about, which are these delivery vans. You made an announcement as well today. You have Walmart and you have FedEx. Tell us about BrightDrop and how important that is to GM's future.
Well, BrightDrop is incredibly important because it's a whole new growth opportunity for us. And if you remember, just a year ago, we announced BrightDrop. Within that same calendar year, at the end of last year, we started delivering BrightDrop vans to FedEx. I can tell you the drivers are telling us that's the vehicle that they want to drive. And so it's so important because it's a total growth opportunity. And I think it shows what General Motors can do of incubating a startup within the company. Travis Katz, our CEO, is a software entrepreneur. And so it's more than just the BrightDrop vehicle. It's the e-pallets that are allowing for the efficiency that FedEx is seeing. And then also the whole software ecosystem to make sure that we can manage the system, get the efficiencies, reduce congestion. And, it's a complete system that is total growth for General Motors. So I couldn't be more excited and proud of what the team has accomplished.
Mary, I do want to talk about the management team there, specifically the departure of Dan Amon last month. A lot of investors are basically backing this stock largely because of some of the moves that he made, of course, to help cut costs, but also, of course, the moves that he helped to make in building up that cruise division here. Who's running that division right now? Who's in charge?
Kyle Vogt. And let's remember, Kyle was the CEO up until 2019. So he's an incredibly talented and capable entrepreneur. And he was a co-founder of Cruise. And so it's in very capable hands right now. The entire management team is well intact. And the business plan that we have for Cruise has not changed at all.
For our audience on Bloomberg, on television, radio, and YouTube, we are speaking with Mary Barra, the chair and CEO of General Motors. We've been talking, Mary, about your Silverado announcement, your various EV announcements. That's for the future. Let's talk about the present just for a moment. And very specifically, where are you on Omicron? Is it affecting your production right now? It's affecting a lot of operations around the country.
Well, I'm incredibly proud of our manufacturing team and our warehouse teams. They are continuing to follow the safety protocols that we've used for almost 2 years now. And so we're able to produce vehicles safely. We work with our suppliers to make sure they're using the same safety protocols across the globe. And so far, we're not seeing an impact. But, we stand ready to work with our suppliers to work through any issues that we may have.
With regards to, have you had any issues or any continuing issues now with the chip shortage and some of the other supply chain issues that we know had at least slowed the production of some vehicles last year?
Well, yes, we saw significant impact with the semiconductor shortage last year. I would say every quarter it gets a little bit better, and so we're seeing a better Q1 than Q4, but we still think it's going to linger into the first half of this year, and we should be farther out of it by the end of this year. But we're not through it yet. There still is work to do, but we're also working strategically on not only what we need to do for the short term to secure supply, but also to the medium term to make sure that we're leveraging a strategy around semiconductors that never puts us in this type of position again.
Mary, you've said that your strategy overall is to change General Motors from a vehicle company into a platform country, really almost like an iPhone or something that we have. Where are you in that process, and particularly in convincing Wall Street that, in fact, you're not just a car company, you're really a future technology company?
Well, I think today was a very important day because people started to see the real products that are coming off of our first platform, which is Ultium. Again, whether it's an Equinox all the way to the Hummer, the BrightDrop, the Cadillac vehicles. So a number of vehicles that we shared all coming off of the Ultium platform that, by the way, we mentioned is not just for automobiles, but for other modes of transportation as well. And we have ongoing work and partnerships that we're doing in other spaces. The second platform is Ultify, and that really is turning the vehicle into a software-defined vehicle. And today, Scott Miller, our head of the software-defined vehicle, shared the progress that we're making that really allows us to build on what we have with OnStar from a subscription, a services model, and really the whole concept is your vehicle can get better after you've purchased it with something that maybe didn't even exist the day you drove off of the lot or it was delivered to your home. So important that we move to the software-defined vehicle because that gives us opportunity for a very different revenue or margin business that we're well positioned because of all of our knowledge with OnStar. And then if you look at the third area where I really believe Cruise will be the first to have large-scale ride-sharing goods movement, that will be a platform unto itself. And we announced that potentially as early as mid-decade, we'll have personal autonomous vehicles on that network. So, when you look at the different platforms the company has, I think today was a very big proof point day for everything that we have already, and it's already, in motion or in production when we look at the Ultium platform. So very significant.
A lot of developments, but mainly congratulations on that announcement of the Silverado. Thank you so much to Mary Barra. She's Chair and CEO of General Motors. Back to you.
All right, David Weston, thank you so much. Mary Barra, Chairman and CEO of General Motors there on Bloomberg Radio, TV, and YouTube. Shares of General Motors, by the way, they're down about 3.4% in today's session, but we're seeing overall selling in the trade. Stock, though, Tim, up more than 8% this year.
Well, let's get more details on what exactly is going on in today's trade. Here's Charlie Pellet.
Thank you very much. Of course, you heard the interview with Mary Barra live right here on Bloomberg Radio. GM entering the electric pickup battle with a 400-mile Silverado EV. During that conversation, Barra touching on a number of issues, including semiconductors.
Oh, yes, we saw significant impact with the semiconductor shortage last year. I would say every quarter it gets a little bit better, and so we're seeing a better Q1 than Q4, but we still think it's going to linger into the first half of this year, and we should be farther out of it by the end of this year, but we're not through it yet.
And again, GM shares down now by 3.3%. Rest of the market selling off right now. We are looking at lows of the day. The S&P is down 62 points, down 1.3%. NASDAQ down 393, a drop there of 2.5%. The Dow down 238, a drop now of 0.7%. 10-year yield 1.69%. 10 years down 13/32. Spot gold flat on the day now, up just about 23 cents. Little changed, 18.14 the ounce. West Texas Intermediate crude up 0.7, 77.57 a barrel. Equities deepening losses after minutes from the FOMC flag the chance of earlier and faster interest rate increases. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, got it, Charlie. Thank you so much. Want to get to this week's Bloomberg Business Week cover story. It's about the pop star turned businesswoman that licensed out her name for an array of products. It became a $1 billion business until it wasn't. It fell into the wrong hands, some might say. It is now back in her hands. She's looking to build it back. And Tim, yes, this is the chicken of the sea pop star. We're talking about
Chicken
Jessica
of the
Simpson.
Sea. You know,
I watched Newlyweds. I was devoted.
About that viral moment. I think in the story it's described as it went viral before things went viral. Hey, let's get to that story. Eliza Ronalds-Hannon, high yield and distressed credit reporter for Bloomberg News, is one of the bylines on that story. She joins us on the phone from Atlanta. Also joining us is Joel Weber, editor at Bloomberg Business Week. He joins us on the access line from Brooklyn. Joel, this is one of those stories where it's like every time I read another sentence, I would learn something new, not just about Jessica Simpson, but about her business. When was the moment that she realized she needed to take this company back?
It's a pretty harrowing beginning where she's basically giving birth and trying to get control of this company that she had basically watched grow, but then sort of lost control over. I don't want to give away all of it because it's a rather touching, crazy moment that I hope to never ever find myself in.
I think it's very wrong.
I think it's safe to say you won't, but that's okay.
Carol. Yeah, exactly. The chicken of the sea reference. I was like, how quickly will we get to that? And like that kind of surprised me that we got there that quickly. But
I love that series, and I remember it really well.
So I think this is just an amazing story because here's Jessica Simpson, who's somebody, a huge pop star, and in many ways kind of like hits it from a business perspective, like turns her pop stardom into something that's this enormous brand, generating a ton of money, and then it's sort of like everything that could possibly go wrong goes wrong on her. And that's where I'll turn over to Eliza, because there's basically been this kind of amazing comeback story that we basically have a little bit of news in here, even that about how she's reasserted herself. So Eliza, tell us how she's gotten back her name.
Yeah, well, she fell into the brand management industry where, because it's so difficult for celebrities to finance their own endeavors, they often are the clients or part of the portfolio of a company that specializes in owning brands. But as part of that model, which many say is not sustainable, those companies really buy the brands to run them out, and they don't reinvest. So it's really a demonstration of how unsustainable that model is and how it may be, in fact, more valuable for the face behind the brand to have more of an active stake in what's happening in order for it to kind of reflect all the potential they have.
Eliza, I'm curious. I always love talking to people after reading these stories because I can learn how the sausage was made. But I'm wondering how, you cover high yield and distressed credit. And how did you come to find yourself writing about Jessica Simpson?
Did Joel come to you? Did you go to Joel? We just want to know.
Well, it fell into my purview because the only way that she was able to get her brand back was because the parent company, which is part of this unsustainable model, had to file for bankruptcy. And, in the bankruptcy auction phase, the assets, were available for purchase. So she already owned half of, a little bit less than half of the equity stake in her own business, but this gave her the opportunity to buy the rest of it and on the cheap as well, because assets in bankruptcy are always, a little bit discounted.
So how does this go down? You lose your name. Where do you go from there? Because all roads lead to Delaware when that happens, right?
Well, I mean, it was a very conscious and, potentially, arguably savvy decision that she made back in 2015 when her business partner at the time, Vince Camuto, who helped finance the operation and also licensed and manufactured some of the goods, he died. She needed, a capital injection in order to take her business to the next step. And, it's hard to get financing in the public markets, as we know, and it's, she's not quite big enough of an operation to necessarily be able to conduct a fundraising process herself or within her business. So you tap one of these brand management companies in order to, when they buy you, you get a lot of that cash, and you also get arguably a parent company who's going to be invested in your success. Now, those companies are publicly traded, and they are under all the same pressures as any company is to deliver on margin projections, and they often end up cutting corners and really just wringing dry their assets and then kind of casting them aside.
What's great about your story, too, first of all, it's just so detail-oriented, and Joel's right. We don't want to give too much away because it is an incredible read, and I highly recommend everybody check it out in the magazine or online at businessweek.com. But you do get into the players. I had no idea that Camuto had such a big role in building up this company, and he really was kind of a godfather to all of them. And her mother, too, where we know parents, when it comes to younger folks, can either be a detriment or helpful, but her mother... What?
Well, look at her dad. And
exactly.
And the impact that her dad had on her career.
Yeah.
And, even in the case of Camuto, it was actually his son who first told him to look into working with Jessica Simpson. So it really is a multi-generational affair, this whole story.
So where do we go from here with them?
Well, how things develop and how Jessica Simpson's brand does in terms of sales will determine whether, in fact, we can say definitively that this model is more sustainable than the model that would see, companies owning a portfolio of brands. So, she did manage to survive for quite a while under that model, and she and her team seem to certainly believe that they're going bigger and better from here. But the same thing that brought down the parent company, which was leverage and debt that they had to take on in order to expand, is in the picture here with her. She and her team had to get a loan in order to make this $60 million bid. So it's really just a question of whether her earnings can outpace the debt obligations from here on out. But certainly, it was described to us that once you're owned by this machine, the celebrity themselves can start to feel a little disaffected and not really be giving it their all in terms of appearances and even just, greasing the wheels with, relationships with distributors and department stores and making sure to show some face. So once, I think there will be a whole revitalization of the kind of morale behind it.
I think when people, Eliza, see that a celebrity is associated with a brand or has their own brand, people often ask the question about, how much is this individual who we know from, stage and screen and newlyweds, right, Carol?
Yeah.
Involved in day-to-day operations of the business and how much is sort of other people do. How would you describe Jessica Simpson's involvement right now?
Well, like Joel said, her mother is really the biggest brains behind the operation. She's been extremely involved since day one, and she's certainly got a head for business, and she and Jessica work really closely with a team that's not really that big. I mean, I think at one point there were only 8 of them or so when they were owned by Sequential Brands, but you know, they have a lot of help because one of the things that's important to know is that the business itself, the operations that are required are pretty limited because you're not actually manufacturing the goods, and you are, you know, there's a lot of the supply chain that is outsourced through the licensing process. So what the Jessica Simpson element of the whole business needed to do before was really just keep giving approvals to different models of, you know, clothing and then just keep it moving. Now they're going to need to get more involved in really plotting out the future because their ability to do so was limited before, and they was really in the hands of the board of directors of a big company that for whom they were only one of many.
And it's the first time, and it's a very different environment, as you say, and you write about that it was the first time around. It's incredible read, and I highly recommend it. Thank you so much, Eliza Reynolds-Hannon. She is high yield and distressed credit reporter at Bloomberg News with us from Atlanta. Jill Weber, editor of Bloomberg Business Week on the Access Line in Brooklyn. It's the cover story this week. Check it out online at businessweek.com. You're listening to Bloomberg Radio.
Close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close.
This is our broad array of Bloomberg audiences, TV, radio, YouTube, to digest, well, some pretty phenomenal minutes and market reaction to those Federal Reserve minutes. We knew they'd be hawkish, but even more hawkish than really the market anticipated.
Yeah, absolutely. I know this is Taylor's world, but man, you really saw that big move up in yields along the yield curve. The NASDAQ, which was down about 220 prior to the release of that FOMC minutes, it's now down, what, about 396 points. So we wanted more clarity, Tim, when it comes to timing and so on and so forth. And it looks like we got a little bit of that today.
We did. Look, you can't forget about the S&P 500 down about, close to 1.3% right now, but hitting session lows, Caroline, just after those minutes crossed.
Yeah, let's look at the majors and how they're underperforming because big tech still feeling the force. We're worried about some of those more, higher valuations, lower revenue producing companies. Those growth stocks have been under pressure for the week and continue to be so on the day. Let's look in on some of those benchmark moves because, as you say, the S&P 500 underwater by some 1.3%. That's 62 points lower. The Dow had been your outperformer, had been in the green. That now sinks by some 218 points, off by 0.6%. The NASDAQ, though, clearly under pressures at the tune of 2.6%. Russell as well, the small caps feeling the pain, off by 2.4%. That's 53 points lower, Taylor.
Big tech also feeling the pain, Caroline, as you mentioned that. And it's so interesting that I know 3 days does not a trend make, but again, what we saw Monday, Tuesday on a sector level, we continue to see today with energy, materials, the big outperformers here. What's interesting is this really has been a yield story. So as yields are rising, it is big tech that's down at the second to worst there on the bottom of the screen, off about 2.3%. Real estate also, and Romain, you would expect that with the rate of change that we've seen in the last 3 days within that yield market.
Yeah, look, rates right now are driving the market pretty much across the board here. You talk about those multiples, you talk about that valuation. Microsoft down for a 5th straight day now. This is actually the longest stretch we've seen of declines in Microsoft going back to the start of September. The stock down more than 6% over that stretch here. But I want you to take a look at the second line of that screen. That's Monday.com for our TV viewers. It's down about 14%. This is the big application software company that went public back in June. And I sort of cherry-picked this name out of a hat here of amongst the big software companies. And this is what's basically getting killed right now. A lot of these companies, they really have no real earnings, I guess, to match up with some of their multiples, at least not in terms of what was it been priced into this market last year here. And you're really starting to see these names get re-rated pretty hard here. So keep an eye on a lot of those names like Asana and Appian, Salesforce, Elastic, Zscaler, Trade Desk, all the like, all down significantly here on the day. If you're looking for any bright spot, you are going to find it in materials, Nucor higher here, as is AT&T, which actually had some surprisingly good subscriber numbers with regards to HBO Max.
And I want to dig into that Monday.com and all those more speculative trades, all those growthier names, because they've been under pressure not just on the day, Romain, but throughout the beginning of the year. And this great chart coming from our Bloomberg colleagues just to show the underperformance of some of those more speculative parts of the market. Yes, the S&P 500 has continued to ramp higher. We're down on the day, but still near that record. But look at the underperformance in particular. You're looking overall in like some of the unprofitable, non-profitable tech basket that Goldman Sachs has over there in your blue line, really like feeling the pain over the past few trading days. But your IPO ETF, the Renaissance one in purple, also taking a nosedive. We are not wanting to take risk in these growth stocks.
All right, so we all were looking for from these Fed minutes, some clarity in terms of timing. It certainly feels like we got it, and it's maybe a lot faster than everybody was anticipating. But, we talked to a lot of folks. COVID is still out there, and it was mentioned in the minutes as well. And what's interesting is a lot of market watchers are saying you've got to look past COVID. Among them is the president of the Minneapolis Fed. We're talking about Neel Kashkari. Here's what he had to say.
Once the COVID shock passes and things start to go back to normal, and workers fully return and demand goes back to normal, I don't see any reason why the economy wouldn't revert back to the low inflation regime that we've been in for 20 years.
All right, guys. So, of course, that's Neel Kashkari, president of the Minneapolis Fed. Are you all ready to look past through COVID yet?
Okay, if they're ready to look past COVID, then what's the reaction going on right now that we got out of those Fed minutes, which is what we should really be focusing on. When you read those Fed minutes, it becomes very clear that they're worried about inflation. So why am I supposed to believe that we're headed back to a low inflation regime if the Fed appears to be panicking about high inflation?
The New York
Square
Fed
that circle.
Well, the New York Fed has a new index out. They're looking at supply chain, and they're saying they're seeing an easing of it. Mike McKee earlier on TV was looking at things like auto sales, and I think it was mortgage applications. The trend line is going down, and he said if things like that are starting to ease, that will maybe have a role in terms of bringing down inflation, and the Fed won't have to be so aggressive.
But that New York Federal Reserve data being released, yes, it's easing, but it's still at the worst since 1997. We're still seeing that pain point. We're going to be talking to the chief of the ports for the Biden administration in a few moments' time, talking about how, they're looking to still unclog some of these supply chain efforts. Meanwhile, we see the companies having this labor issue as well at the same time. It feels like these inflationary pressures are very real, and that is why the Federal Reserve is taking the stint it is. Neel Kashkari himself still wants 2 rate hikes. Remember, he's the ultimate dove on the Federal Reserve.
Hey, one thing that I keep going back to when thinking about the notes that we saw or the minutes that we saw at the top of the 2 p.m. hour is the idea that the Omicron variant wasn't raging in the United States when the Fed had this meeting. And I wonder how the conversation would have been different. And certainly we're going to look forward to the late January meeting to understand. But life now in the early part of January is completely different for many people in the United States than it was just 3 weeks ago when this meeting happened.
I don't know. We spoke with Northwell Health CEO yesterday, and he said 50% of his COVID patients are in the hospital and they happen to have COVID, but they're actually there for a broken leg or appendicitis. They're not there because of COVID.
Right, and hospitalizations are certainly important, but another important thing is the way that consumers adjust their spending based on how they think about risk. And it's important to think about, okay, well, if you're not going to go out to dinner because of this, or not going to go do something for the weekend because of this, your spending changes. And does that spending get pushed forward? Does that spending go to goods rather than services?
I think we knew yesterday it was just shifting. It wasn't increasing or decreasing. It was just changing places.
And more goods than services then, perhaps, like we've been seeing for the last 2 years.
Does this have to do with Omicron, though? What we learned out of the Fed minutes?
Well, I think what the Omicron connection is that Omicron wasn't raging then.
But they still see it as an ultimate downside risk. That was what clearly came through in the minutes as well. So, but you're right, this is all backward-looking data.
Right.
What the real fast, high-frequency data tells us right now is people are not going out.
Right, exactly. I canceled a reservation. All right, that does it. We're going to be back live on radio, TV, and YouTube. We're going to do that for Beyond the Bell at 4 p.m. Wall Street time. We're going to take you through today's market close on this Fed Wednesday.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, you are listening to Bloomberg Business Week. Carol Massar along with Tim Stenovic. Of course, we're going to get back to our TV team. Romaine, Caroline, and Taylor will do that at 4 p.m. Wall Street time. Tim, I think you do bring up a big point. Stephanie Shelton of Stony Brook yesterday talking with David Weston. We played some sound from her yesterday with our TV team. I mean, she said it's still all about COVID, and we just don't know. She, too, is optimistic. You know, others that you talk to, the Fed, optimistic to some extent, right, in terms about growth coming back and the supply chain constraints coming down. But, you know, COVID, if anything we have learned, here we are in the third year of all of this, is that we don't know a lot, and things can give us a curve at any time.
But what it does mean is...
Throw us a curveball, excuse me.
You know, so I got another text this morning.
They were tough on you, right?
Yeah, but it's
you
okay.
were good. You were good.
You know, but it's what's fresh in my mind is a text that I got from a friend this morning saying that he and his wife both have COVID. They have, you know, close to a 2-year-old daughter. Because they have COVID, she has tested negative, but she can't go to nursery school or daycare as a result of this.
Right.
So that means that she's stuck at home with them.
Right.
They're not working because they're taking care of her. So that does result in a change in pattern, right? And whether that change in pattern is 5 days or 10 days, it means that spending shifts. Perhaps spending goes down a little bit because they're stuck at home. But if you see that on a widespread scale, that does have real implications on the economy.
But this is why we saw the rally, though, on that first day, trading day, is that the expectations from research and what we're hearing from around the world is that this variant isn't going to be as detrimental. Having said that, we know it is spreading, it seems, to a wider swath of people. And so even a small percentage of folks that end up in the hospital, you know, that can be really troubling, especially on our hospital systems. But time will tell. I am crossing my fingers, crossing my legs, crossing my arms, crossing my eyes, hoping that in a couple of weeks that hopefully we've peaked out at this.
It's just massively disruptive.
Yeah, exactly. And it's another question out there. But the Fed certainly seemed a lot more confident because they certainly signaled that they might be a little bit more aggressive and faster at all of that. All right, let's get to world and national news. For that, it's over to our 99.1 newsroom in the nation's capital and Nancy Lyons. Hey, Nance.
Thanks, Carol. On the eve of the January 6th insurrection, Attorney General Merrick Garland is providing an update on the investigation into what happened.
The Justice Department remains committed to holding all January 6 perpetrators at any level accountable under law, whether they were present that day or were otherwise criminally responsible for the assault on our democracy. We will follow the facts wherever they lead.
Garland says they've charged more than 725 people in connection with the riot. 325 face felonies. President Biden's economic agenda may be on hold, but lawmakers on Capitol Hill are reportedly in early talks on another round of coronavirus stimulus.
Sources tell the Washington Post Democratic Senator Ben Cardin and Republican Roger Wicker have been leading the discussions on a roughly $68 billion package that could be a mix of new and old spending. It would reportedly be focused on helping restaurants, gyms, performance venues, even minor league sports teams get through the Omicron wave. Sources say both senators have been trying to build support with members from both parties, but another round of pandemic spending could face an uphill battle in a 50-50 Senate. In Washington, I'm Nathan Hager, Bloomberg Radio.
CDC advisors are meeting today to discuss the use of Pfizer booster shots for kids ages 12 to 15. Boosters have already been approved for those over the age of 16. The White House Coronavirus Task Force now says the Omicron variant makes up 95% of the COVID-19 cases. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than...
Thank you so much. So we're watching the markets because we know equities have definitely sold off. And we've seen yields move up all along the curve, in particular watching that 10, which is right now at 170. So it peaked just below 171. Shorter end of the yield curve, I've seen that 2-year note. Let me just look where it was at its high, about 0.83. Right now, just below that. So keeping an eye on that with about, what do we have? About 50 minutes left in the trading session. Rivian, though, it is getting hit big time, down about 11% today.
Yeah, look at that. Rivian's dropping as Amazon agrees to an EVAN deal with Stellantis. Rivian falling after one of its biggest backers and customers agreed to buy battery electric vehicle vans from the rival automaker Stellantis. This is really interesting because Amazon is an investor in Rivian.
Right, it's just the tangled web.
Right, okay, so the first vehicle's under the new order. They're due next year. That's according to Stellantis. It didn't disclose the size of the deal, but the company CEO said the order was, quote, a significant number.
Yeah, exactly. All right. So the development, a threat to Rivian. They know they've been a front runner in a large pack of EV startups chasing market incumbent Tesla. In fact, the big take is exactly about that. People are gunning for Tesla, if you will. We'll talk about that a little bit later on our show. But again, the threat to Rivian, in part because of that backing of Amazon, as you just mentioned. So, the decline adding to Rivian's recent slide, the stock briefly topped $100 billion in market value. At the time, more valuable than Ford, also an investor, and General Motors following its November listing. So it's tricky. It's difficult. It's a different race from when Tesla came in, but I will also say Tesla was also a very volatile stock early on, right? And there's a lot of questions out. So I guess I wouldn't count anybody out at this point.
No, don't. And listen to what these companies said. So Rivian said, quote, large fleets focused on electrification and carbon neutrality represent a win for the mission. Amazon's scale is globally unprecedented, and we expect them to purchase vehicles from many providers. Amazon echoing those comments, Carol, saying in a statement that it had always intended to work with multiple providers of electric delivery vans, and they continue to be excited about their relationship with Rivian.
Rivian right now about an $81 billion market cap. Ford back up to 94, and General Motors also above Rivian. All right, you're listening to Bloomberg Business Week on Bloomberg Radio.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World headquarters, I'm Charlie Pellet. Steep losses for U.S. stocks just about the lows of the session. Lots going on. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks are under pressure as the Fed minutes flag the chance of earlier and faster rate hikes. Dow's currently down 239 points. S&P's dropped 68, while the NASDAQ is lower by 430. The U.S. 10-year yield at 1.7%. Gold is little change. Bitcoin is down by 3.3%. And among the main 11 S&P sectors, leaders were energy and the materials, real estate, tech, and telecom were under pressure. Leaders to the upside in the Dow, Merck and Intel, while Salesforce and Microsoft led to the downside. In other news, U.S. swaps price in an 80% chance of a Fed rate hike in March. The NVIDIA CFO says holiday demand was strong. And GM CEO said the first edition of the Silverado EV sold out in 19 minutes. Wrapping things up, Coca-Cola hit a new all-time high. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. Just want to add in Grammy Awards postponed again. And to hear live breaking news over your Bloomberg, type Squawk, SQUAWK, on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Charlie, I've seen this movie before.
I remember when I was in the studio with you in March of 2 years ago.
I know.
And we thought we were gone for 3 weeks, and I think so many of our listeners felt the same way.
I know.
You could have said, I've heard this album before, I've seen this concert before, Carol. It's the Grammys
I've sung this
we're
song
talking
before.
about. Okay, there we go.
I know, I'm not very creative.
And it's a sad song.
I know. All right, Charlie, you take care. We'll check in with you in a little bit. Hey, listen, we did just get a read on U.S. car sales. We got a bunch of them yesterday, then we got 4 today. And among our most read on the Bloomberg, Tim, it's a story that's also today's Bloomberg Big Take. It's about how the big guns in the auto world, we're talking VW, we're talking Toyota, they are revving up to go after and dethrone Elon Musk and Tesla King Elon.
That story you're talking about is by River Davis and Craig Trudell. Craig Trudell joins us now. He's global car czar for Bloomberg News. He joins us on the phone from London. Craig, do the stalwarts, the companies that are generations old, have what it takes to dethrone Tesla when it comes to electric vehicles?
Hey, thanks for having me. I think this is another story where it's maybe kind of like you've maybe heard this song before, seen this movie before.
Nicely done.
I think there's been a lot of talk over the years about the incumbents are coming for Elon. Basically, every time a conventional car maker brings an electric vehicle to market, it's very much positioned as going up against Tesla. And I think up to this point, what we've seen is really, that Tesla has been able to maintain real dominance of this segment, but it is still a sort of, smaller subsegment of the overall industry. And it's been the case largely that, a lot of the electric vehicles we've seen have catered more so to the higher end of the market and not necessarily, the mainstream models. We're seeing some significant action more recently from the likes of Volkswagen, and I think 2022 something that will very much be interesting to watch is a company like Toyota that sells an awful lot of cars around the world, including the RAV4, the best selling non-pickup in the U.S. They have a new BZ4X. I'm not sure I'm crazy about the name, but
I was just going to say, it really rolls off the tongue.
Yeah. It's a RAV4 lookalike that is going to be really interesting to see how that does when it hits the market this year.
What's interesting is, and I got to say, Craig, one of the things I love as a consumer, I have been just waiting for more choices and more selection. And I love the idea that maybe this market, the auto market, is really starting to lean in, more so into EV as more of the big automakers get involved. And so thank you, Tesla and Elon Musk, for really pushing everyone to catch up at this point. In terms of strategy, VW and Toyota, both behemoths, but they're going about it differently, right?
Yeah, absolutely. I think with Volkswagen, they really didn't have a choice but to go in this direction, really as of September 2015, when it was really exposed the extent to which they deceived customers and investors about diesel. And that emissions scandal really sort of, took away, management's control of their future. They really had sort of no other option or path to go down but to go fully electric. Toyota pursued a very different strategy. I mean, if we go back, 15 years ago, it was really the case that you had, VW promoting diesel as a cleaner option and Toyota promoting hybrids. And we know how that, turned out. The Prius was a huge hit. Toyota sells an awful lot of hybrids, more hybrids than any car maker sells electric vehicles, including Tesla. And they really haven't necessarily, sort of had to go fully electric. They've really sort of been able to bide their time, allow for battery prices to come down. They have not been standing still. And I think we saw real evidence of that last month when Akio Toyota, showed up with 17 electric vehicles at an event in Tokyo. You don't just sort of do that at the drop of the hat. It's clear that, they've been doing some significant work behind the scenes there.
There's a line in this story that hit me early on. It is something akin to when Apple entered the mobile phone market and outclassed the once dominant Nokia. I mean, we're not running around playing Snake on our Nokia, candy bar phones right now.
Too soon after the BlackBerry.
Yeah,
years, okay?
You're
Come
right,
on,
Carol,
come on.
You're right. Hey, Craig, how ugly is this going to get, and what does that ugliness look like?
I think that a lot of the valuation of Tesla sort of suggests that, there's a possibility that we'll see a real collapse on the part of the incumbents. What I can say, just, looking at the industry just the last few years, that even as Tesla has experienced this very significant, very impressive growth that we have to give Musk credit for, you are not seeing Toyota sales collapse. You're not seeing Volkswagen sales collapse. I mean, the incumbents are still selling an awful lot of vehicles. I think that if it's going to get ugly, I think, we're going to potentially see, some of the smaller, weaker players in the market really start to have an even more difficult time. And I do think that there are some sort of limitations to Tesla, being able to scale up as quickly as the valuation sort of suggests.
Right.
But I think it's also the case that the loser here is going to be internal combustion engines, right? So there's an awful lot of growth for EVs, to still experience for years to come.
Right. Anybody slow to embrace that. And in the meantime, as you write in your story, you and your team, I mean, Tesla's also investing in terms of adding to its Shanghai plant, and then it's got the plants in Berlin and Austin, and they're doing a lot. Great story. Craig Trudell, Global Car Czar at Bloomberg News, joining us from London.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 1061 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Tim, we got to pack our bags. It's time to go to CES.
Oh, that was my joke. I was going to say, hey, how's Las Vegas right now?
Yeah, not going.
Hey, you know what, though? There are still people there.
I'm not a good gambler.
Oh, I'm not either. I am not a CES person. I'm not good at CES.
But we've
Here's the
both
problem.
been. We've both been. Different times, obviously.
Yeah. I don't know. Maybe we were there at the same time. We didn't know each other then. This was,
a long time ago. It was before it became like where auto companies were there.
No,
Mine
so
was really.
I was there, when auto companies were there.
You were there.
It was basically a car show.
It's so changed. Anyway, we're going to talk to our Mark Gurman, who is not going to be there, but he's going to miss it.
He
can't wait
to look forward
go
to it
back.
next year.
Yeah, exactly. All right, first up, though, let's get back to the markets. Got to talk about it, Charlie Pellet.
Indeed, steep losses. Let me give you the numbers. With the S&P now down 71 points, low of the day right now, down 1.5%. NASDAQ is plunging 446 points, down now by 2.9%. Dow Industrials lower by 266 points, drop there of 0.7%. Broad-based selling. NASDAQ 100 index, by the way, down 2.6%. Russell 2000 down almost 3% right now. Dow Transport's down 1.1%. And the SOX, the Philadelphia Stock Exchange's Semiconductor Stock Index, it is lower now by 2.9%. 28 minutes to go until the closing bell. Keep it locked into Bloomberg Radio for the very latest. 10-year yield 1.70%. Equities deep in losses after minutes from the Fed flag the chance of earlier and faster interest rate increases. Spot gold down 0.3%, 18.09 the ounce. Bitcoin now down by 4.6%, 44,079 on Bitcoin. Crude up 0.4%, 77.27 a barrel. Just getting word from Southwest Airlines. It is offering most of its workers up to double time for extra work at Southwest. That extra pay to last through January 25th. Southwest shares now lower by just about 1%. Lots of questions about interpreting CDC guidance concerning isolation and quarantine and when to resume normal activities. Dr. Bhakti Hansadi is Associate Professor of Emergency Medicine at the Johns Hopkins Bloomberg School of Public Health.
It leaves employers unsure what to do with their workforce, right? So test, symptomatic, isolate for 5 days. Okay, that's clear. But then how do I get a test to you? Will those test results be available on the same day? When do you make the decision whether to isolate for a further 5 days or return back to the workforce? And if you do return back to the workforce, how do we ensure that that return does not put others at risk? So I think that guidance has been challenging to interpret, but also challenging to implement.
Dr. Hansadi with the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Pfizer shares up now by 2.1%. German partner BioNTech, its ADR is down 5%. AstraZeneca's ADR is down 0.4%. Moderna down 6.9%. J&J up 1.1%. And that's a Bloomberg Business Flash.
All right, Charlie, really appreciate that update. You're listening to Bloomberg Business Week. Carol Master along with Tim Stenovic. We are live in our Bloomberg Interactive Brokers studio. We are not at CES.
Would we? I mean, we could go next year.
You could go next year.
Yeah, maybe. Okay. Well, someone else who's not at CES but is looking forward to going next year is Mark Gurman, technology reporter for Bloomberg News. He joins us on the phone from Los Angeles. Mark, I got to tell you, I'm not a betting man, and it's probably good that I'm not because, 2 weeks ago I would have said to you, I'll bet you $10 that CES gets canceled. It's not canceled, despite the fact that there are many, many large tech and consumer goods companies that are not there right now. So who is at CES?
Well, Samsung's there, Qualcomm is there, and a bunch of car companies are there. But if you're looking for Apple, Amazon, Google, Peloton, Twitter, Pinterest, Intel, NVIDIA, AMD, you're not going to find them.
And that was not an exhaustive list, we should note.
That was not an exhaustive list. Those were the big ones I could think of on the top of my head right now. Oh, Microsoft, that's on the list too. Meta as well.
And you're not going to be there, right?
Well, that's the biggest dropout of CES 2022, of course.
That's what everyone's saying.
Stop the presses. Gurman's not going to be there.
Yes. But, the show still goes on virtually online. Companies are still making their announcements. I wrote in a column earlier today that I think CES and these in-person events are extraordinarily important obviously the first week of January in 2022, right after people have been spending time with their families and friends and parties and such for Christmas and New Year's, traveling to Las Vegas of all places from all over the world. Now's the worst time amid Omicron to have an in-person event. That doesn't mean they should go away, though, right? Once it's safe, I think that all of these different in-person events should come back. There had been some speculation that these virtual showcases from Apple, Microsoft, you name it, have been so successful and so well received that maybe in person, even after we're done with this virus situation, they would never have to come back. But I think that's totally wrong, and we definitely need these in-person gatherings.
What's so great about the in-person gatherings? And I think that CES is a good example of this, Mark, because, you know, I've been to CES a couple of times, and Apple doesn't have a presence there in the sense of, you know, there's an Apple booth or Tim Cook is on stage introducing a new product. They're really nowhere to be seen unless you're, you know, going to suites of hotel rooms and having meetings behind closed doors.
Yeah, forget the people. It's really, you want to try these technologies out, right, before you either buy them or you invest in them, right? Like, Apple's going to announce its augmented reality / virtual reality headset within the next year or so, right? Imagine watching that announcement while virtually. That's going to be a terrible experience. What you really want is you want to see the product introduced, then you want to go to the try-on room and try this product out to really understand it. Hearing about it, seeing a video of it is really only a quarter of the story. Likewise with any new iPhone, any new Amazon product. I mean, I remember being able to go to the Amazon fake house they have at their headquarters in Seattle. They announce a new version of the Echo. Well, what do you do when you're done watching them announce it? You walk 2 minutes to the other side of the campus and you get to try it out with your voice and see it in person, take pictures of it and hold it and experience it, right? And so there's no reason why after the virus is done or once we're in a safe environment to stop doing that and ignore that just because, you know, virtual is a little bit more convenient or they've really produced these nice videos. Once it's safe, we really need to go back to that. And I want to reiterate, I don't think it's safe right now. I don't think holding CES as we speak is a good idea at all. But once it is a good idea health-wise, you know, we should be going back to that full throttle.
Yeah, there's so much going on that you really want to experience yourself. Hey, you talked about Facebook. You know, there was a story that kind of went back and forth, and Meta Platforms did come out and says it has no plans to halt the development of a new operating system to run its virtual and augmented reality powered devices. It was countering a report earlier in the information that said they were. Just got 30 seconds here. Is there anything that we need to be aware of on that front?
There's probably some nuance there, right? What the information was talking about was a custom OS not built upon Android. It's unclear what Meta was referring to. Obviously, they're still going to be working on a new Android OS, so I think there's some nuance there. The important thing to note is Meta and Apple, they're going to war over AR and VR, so it'll be fun to watch.
Yeah, exactly.
I can't wait. I mean, I can't wait if Apple is indeed going to release some sort of AR product in the next year. That's big.
We're going to leave it. We're going to need it, right? You know my dark thinking about climate change, and we're not going to be able to live out in the real world, so we're going to need the meta world and the metaverse. Mark Gurman, thank you. Stay safe. Technology reporter at Bloomberg News on the phone from his home in Los Angeles. Not going to CES, but he's looking forward to going to it next year.
Well, let's go to Washington, D.C. now for a check of the latest world and national news. Nancy Lyons is standing by. Hey, Nance.
Thanks, Tim. The number of new COVID cases has nearly doubled in the last week to approach 500,000, with hospitalizations rising by 63%, according to the Centers for Disease Control. Bloomberg's Irv Chapman has more from Washington.
Omicron, now 95% of infections, causes less severe disease. The sheer number of cases is putting too many people in hospital, Dr. Anthony Fauci explained.
Since the increased transmissibility of Omicron might be overridden by the sheer volume of the number of cases that may be of reduced severity, but could still stress our hospital system.
Since vaccination of children under 5 years old is yet to be approved, Dr. Fauci said the best protection is to surround them with vaccinated and boosted adults and give them face masks. In Washington, Irv Chapman, Bloomberg Radio.
Concerns about the Omicron variant has prompted organizers to postpone the Grammys that were set for January 31st. They said it posed too many risks. Officials in Philadelphia say a large row house fire has killed 13 people, including 7 children. Fire officials believe the early morning blaze broke out in the kitchen area on the building's second floor, and authorities say the flames traveled straight up an open stairwell. Deputy Fire Commissioner Craig Murphy.
I've been around for 35 years now, and this is probably one of the worst fires I've ever been to.
Murphy says there were 4 fire detectors in the building, and it appears none of them were working. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. Do want to update you on the markets because we are seeing the selling, certainly on the equity side of things, really kind of bottom out here, but nonetheless pretty much staying at our lows of the session. So what does it mean? We're seeing selling in particular, the NASDAQ. It is now down about 2.7%, but I think it went down as much as maybe 3% there. So the NASDAQ is down 2.7%, a loss of 420 points. S&P down 1.4%, a decline of 67. And the Dow Jones Industrials faring the best on a percentage basis among those 3 major indices, down 0.2%, but down 239 points. So we're hovering near our lows of the session.
Yeah, there's some concerns that the higher yields are going to affect those high-flying tech companies. And look no further than ARK Invest's Kathy Wood and her ARK Innovation ETF, ARKK is the ticker, down another 6.4% today, off to a rough start in 2022. And that's tough given that it was down more than 20% in 2021.
Yeah, listen, she's leaning into all of those companies that have some high-flying valuations and expectations. And when they're, doing well, they do really, really well. But certainly in this environment, maybe there's a bit of a rethink and a recalibration. I mentioned the equity trade. I do want to also mention what's going on in treasuries because we've got that 10-year note staying pretty high. It's now at 170, so staying near its highs here of the session. 2-year note with a yield of 0.82. It too is just off, it looks like, its highs of this session, but just below it. Meantime, if you need something lighter or maybe something to look forward to, New York Governor Kathy Hochul wanting the Empire State to keep the party going indoors, outdoors, and on the sidewalks, Tim.
Have you, we were talking about Las Vegas. And when I was in Las Vegas, you were allowed to do this. And I know you're allowed to do this in New Orleans.
Drink on the sidewalks?
Yeah, drink on the streets. Yeah, so she said on Wednesday that she asked lawmakers to permanently legalize the sale of to-go alcoholic drinks to help keep bars and restaurants afloat. Some good news for the bar and restaurant industry here in the state.
To-go drinks. I was supposed to go out for dinner with a friend of mine later this week.
Well, you can go out on the sidewalk and walk around with some
we
wine.
canceled, and I said to her, maybe we should just buy a bottle of wine and walk the streets. Like, maybe
buy the bottle of wine from a restaurant or a bar, and maybe you can do it.
Right, got to be careful. Folks, you're listening to Bloomberg Business Week, and this is Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
World Headquarters, I'm Charlie Pellet. We've got 13 minutes to go ahead of the closing bell. U.S. stocks at or near session lows, right to the numbers. S&P now down by 77 points. That is a session low, down 1.6%. The Dow is down 304, lower now by 0.8%. NASDAQ down 451, down 2.9%, bringing the year-to-date loss. Yes, the year is very young, but so far, NASDAQ this year now down by 3%. The 10-year yield, 1.70%. Gold, spot gold down $4 the ounce, down 0.2%, 18.10. And West Texas Intermediate crude up 0.2%, 77.17 a barrel. 12 minutes to go before that closing bell clangs on Wall Street. Equities deepening losses after minutes from the Fed flag the chance of earlier and faster interest rate increases. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, just got about 12 minutes left in today's trading session. Charlie, of course, breaking down. Yields have definitely moved up, and this is all in reaction to the Fed looking like it's going to start moving much quicker than everybody anticipated. And the equity market certainly under pressure. In fact, we are moving in these last few minutes of trading. We are moving to our lows of the session, so more pressure on that equity trade. Let's get to it with Sandy Villery. Tim, he's portfolio manager at Villery & Company. They've got $2.3 billion in assets under management, and he's based in New Orleans, which that would be fun to be there right now.
Yeah, it would be a little.
They allow drinking in the streets there, right? We were just having a conversation, Sandy, about it possibly.
Well,
the governor of New York thinking about letting it
to go cocktails.
To go cocktails in New York. You can do that, right, in New Orleans?
You can actually, and we're going to see what happens on March 1st. We've got Mardi Gras, which we did not have last year, so we're going to see if that all comes to fruition. There'll be plenty of drinking in the street on March 1st, I have a feeling.
Okay, so let's talk a little bit about the Omicron variant, because you said we'll see what happens, and then get right to your stock pick, Sandy, because we always love having you on and talking about what you're optimistic on and what you're bullish on. But give us an update about how you're thinking about navigating the Omicron environment right now. Certainly, you're seeing some turbulence in equity markets, and that can be attributed to what we heard from the Fed today. But this is all connected.
That's exactly right. And so, with Omicron, and I believe, there's kind of three major problems right now. I would argue that the big negatives are, an overly hawkish Fed, inflation really at the highest level since the early 80s, and then, of course, Omicron. And when I look at the three, I believe, Omicron's probably going to peak, somewhere in late January, early February. And I think you're seeing that, already peaking maybe in Europe. And so I think, the market in general is sort of looking past it. And I think the major thing going on today, is definitely the Fed minutes and a Fed that's, maybe more hawkish than people originally thought. And that's sort of, you can see that playing through with growth versus value indexes and everything from, oil to the financial sector is just all moving in lockstep with where they believe rates are going, and that's a pretty steep move to a 170 on the 10-year. So that's taken the headlines today for sure.
Yeah, you do wonder if this is the new level that will be held, or whether we continue to move higher and closer to that 2% level. Having said that, Sandy, so you've got to make stock selections for your portfolio. Where do you want to be? Are you looking for some of those value plays? What are you doing?
Yeah, I mean, in general, we're looking at, in smaller cap stocks as opposed to large cap, and for a couple of reasons there. Number one, large cap is certainly getting to be somewhat fairly valued when you look at the multiple on earnings, forward versus where they've been historically. The S&P starts to look pretty expensive at, kind of 21 times versus maybe a historical average of closer to 16, where the Russell 2000 is closer to 15. And then also, if you're going to have rising interest rates, small cap usually does much better in a rising interest rate environment, as well as with inflation, as opposed to, let's call it, the S&P 500 as a large cap that's got a third of the index basically in technology stocks that really act poorly in a rising interest rate environment, which is what we're seeing today with growth selling off big time and value hanging in there.
Yeah, I was going to say, look no further than today. The NASDAQ composite down by more than 3% as we speak. Hey, let's talk Caesars specifically, because this is another one that's related to Omicron. And I'm wondering where your optimism comes from when it comes to gaming stocks. I mean, certainly a longer play here because of getting people. Look at what's happening with CES, for example, right? It's happening, but at a much smaller scale. Why the optimism around Caesars?
Yeah, I think Omicron is basically going to open up an opportunity to be able to buy Caesars that's down. It was around $120 today. It's down into the low 80s, and I think that sets up really well to be able to come in and buy a company that's kind of transforming itself. Frankly, they just made an acquisition of William Hill for about $4 billion. That's the third largest sportsbook operator in the country, and you're going to have sports betting and iGaming that's really going to grow through that. In fact, they just spent $1 billion on iGaming and sports betting, and they're going to try to leverage their 63 million total rewards members. So when I start to look through and look at where this could go, gaming companies can trade at 11 to 13 times. If they can do $10 a share in free cash flow, I mean, I think this stock can get to $130. So I want to take advantage of this weakness, related to Omicron, et cetera, to take advantage of a company like this and get it at a very reasonable price.
Yeah, Caesars today down about 6.2%, right now at 84 and change. So you're looking for a pretty big bump to the upside. Hey, one name that maybe we don't talk about a lot, ticker is PLMR, Palomar Technology. This is an insurance company dealing with folks who have to deal with earthquakes and floods and the like. What is the story here that you think it's a buy right now?
Yeah, this is just one that's I think, under everybody's radar, and I think it's being thrown into a basket of these insurtech companies that have really been sold off. And the reality is they have incredible technology. They can get extremely granular on their underwriting, and they go into strange markets like hurricanes in Hawaii, as you mentioned, and earthquakes in California, where they can really make a difference.
It's got to be costly though. Like the insurance business, sometimes I have a hard time, especially when it feels like there are more natural disasters. We're dealing with climate change and so on and so forth. I mean, it just seems like a trickier business.
Yeah, and what's nice is they can get reinsurance, which is great. So that if you were to have a major earthquake in California or something like that, they'd be on the hook for call it up to $10 million or something, but certainly not the amount of damage that would be out there. So what would hurt them is many small storms and things like that, but they would be very protected on the larger storms. So they do a pretty good job of being nimble. They're really only they've got about a 2% market share of this $18 billion total addressable market. So I think they're kind of just getting started and scratching the surface. And if these guys can do call it $2.65 or so, this year, maybe $3 in 2022. This is a pretty cheap stock, and I think it's just being thrown into a basket of technology companies, and I think that's unfair. As
cheap
an
at 46, current PE, forward-looking PE of almost 30. Or are you? What's the metric that you prefer looking at, if there is one?
I like looking out to 2023, where I think they can earn $4, and so I'm really looking at a $15 multiple on that that out year number, and I think they can grow 30%. So that's a very favorable risk versus reward, or growth at a reasonable price type of name. So I'm excited about it, and I just think people just don't know enough about it. It's a small 1.3 billion market cap company, and definitely under the radar.
What about FCX? This is another one that you follow closely. It's at about trading at $41.73 right now.
Yeah, Freeport it's really taking advantage of a lot of interesting trends right now. Obviously, it's a nice inflation hedge, being in
gained
copper.
A lot last year. Up 60%.
Yeah, I think it was. I think this was one that was somewhat left for dead, and going through the story with Richard Ackerson, the CEO, and just trying to understand everything they're doing is. I think people still were somewhat confused about a lot of the things that they're doing from what they have going on in Indonesia, et cetera, and I think people maybe miscalculated just the amount of exposure they have to electric vehicles. I mean, electric vehicles use about 4 times as much copper as combustion engine cars, which is just a great trend. The infrastructure bill is obviously going to help them and have a nice tailwind, and these guys, should have a nice trajectory from here. So I like Freeport a lot.
Well, Happy New Year, and good to check in with you and get some names. Sandy Villery, he is portfolio manager at Villery & Company, $2.3 billion in assets under management, on the phone from New Orleans. All right, folks, we've just got a few minutes left in today's trading session, and the selling, certainly on the equity side of things, it is picking up. We are at our lows of the session, down more than 3% on the NASDAQ 100. And of course, we've seen yields move up. That 10-year note, we're looking at it around 1.7, and we're also seeing that shorter end of the yield curve also moving up. Coming up next, we'll be joined by our TV team for Beyond the Bell.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic, Caroline Hyde, Taylor Riggs counting you down to the closing bell. Here to help take us beyond the bell, our global simulcast partners, Carol Massar and Tim Stenovic, bringing together our Bloomberg television, radio, and YouTube audiences on this Wednesday afternoon. Carol, third trading day of the year, and we're setting up right now on the NASDAQ Composite for the worst one-day decline going back to February of 2021.
Yeah, I do wonder how we're going to look back at this week, this first week of 2022, maybe in a couple of weeks. But, I mean, you look at the VIX, it's up 2.9, almost 3 points in today's session. You've got the SOX down about 3%. So we are really seeing, especially in these last few minutes of trading, Tim, you do see the selling intensifying.
Yeah, I'm keeping my eye on the ARK Innovation ETF from Kathy Wood, down close to 7% right now, 52-week low. A lot of the high-flying tech names in here, and certainly we see the implications of a higher rate environment on these companies. This comes after, ARK was down, more than 20% last year.
But Monday, we were at record highs.
Right.
The Dow was at a record high earlier today, and now suddenly it sinks more than a percentage point. Yes, we are eroding value on the day. There are big moves on a daily basis, but actually, this NASDAQ's at the lowest since December of 20th. So we're just eroding the last couple of weeks' rally.
The good perspective that Caroline and the calm that you always bring.
But Bitcoin's plunging, people. It's plunging.
4% is the new plunge for Bitcoin. Interesting, though, that Romaine, the economic data this morning was strong, the ADP numbers. And I know that lately there's been a breakdown of some of the correlation with what that means for Jobs Day on Friday, but really strong private payroll.
Yeah, I'm glad you bring that up because I do think that the data that we get on Friday could be a change sentiment if it is as strong as we got out of some of those ADP numbers. All right, this isn't going to be a strong day, guys. I mean, we talk about the S&P 500. It looks like it's going to close down here by roughly about 94 points. It's actually right around that 4,700 level. We'll wait for those numbers to settle, but it could actually finish the day right at 4,700, down about 1.9%. The Dow Jones Industrial Average, I'll give you the points, Taylor, 388 down. That's a percentage point here on the day. And the NASDAQ Composite, which we're going to be talking a lot about today, down 3.3% or 522 points. Worst day that we've seen for the composite going back to February of 2021. And then we'll take a look at the Russell 2000, which is actually performing just as bad as the NASDAQ. The Russell 2000 down about 3.3% here on the day.
Yeah, and I think Caroline's spot on. I mean, we had a banner year last year. I mean, it was unbelievable. So are we seeing a bit of a recalibration, especially coming after those FOMC meeting minutes? And I want to just say that there's some sectors like steel, some news out of China potentially, and we saw that group up about 3.5% today, Taylor.
Yeah, Carol, let's talk about some of the other sectors that were higher, because there's frankly just a few of them, 5. When you're taking a look at the second level of the sectors within the S&P 500, it feels a little defensive. You could say food and beverage, household products, utilities, telecoms, right? Those typically would outperform on a risk-off day such as these. Otherwise, half of the green sector is still red, and it gets pretty negative too when we go down to the bottom. It's audio, it's media, it's software, it's semiconductors, it's communication services. So it is a big tech kind of day, Carol, that really saw the brunt of the sell-off.
Yeah, I'm going to go to some of the gainers and shoot, because Qualcomm, please don't beat me up, guys. Qualcomm was a gainer. I know, and I know you talked to the CEO. It was up about 3.4% earlier in the session, so forgive me, because we did see it hit a 52-week high. It was top of the NASDAQ, did not end that way, down about 0.4%. This all had to do with what it's showing off in Vegas at CES, and there was some optimism, but nonetheless, it ended up down 0.4%. Go to steelmakers. Nucor was top, certainly in the S&P 500, up 4.8% in today's session. We did have China Securities Journal reporting overnight that the country's central bank likely to ease monetary policy before the Lunar New Year holidays. So that gave some support to some of those steel names. Particularly, we see that stock. It's been on quite a run this year. It's up about 10% or so in 2022. And another name I want to bring that actually gained is AT&T, up 2.2%. Analysts are positive on the company after it reported preliminary fourth quarter subscriber data. So we're talking about HBO Max, wireless numbers, extending a recent streak of gains to a third session. It is up roughly 9% so far this year. So one of the gainers, Tim, in today's session.
Hey, look, in all fairness to Carol, tough day for to actually find gainers. Not a tough day to find decliners, though. Let's start with Microsoft. The reason I chose this one is because it was on a points basis the worst performer in the NASDAQ 100. NASDAQ 100 today sinking the most since March in the tech sell-off that we saw. Shares down for a fifth trading day in a row. This is the longest losing streak since September. I also want to check in on shares of Roku, finished the day down by more than 11.7%. Atlantic Equities analyst initiated coverage, but with an underweight rating for Roku. But also on a day like today where the high-flying, high-valuation names get hit hard, Roku certainly not immune to that and a big part of that. Also, we got to check in on the meme stocks. Something interesting happening when it comes to meme stocks. AMC down more than 10% today. All the meme stocks really having a terrible day. The meme stock index that we follow here at Bloomberg, down to levels last seen last January, so almost a year ago, before a lot of the meme frenzy took off. But AMC shares down more than 10% today.
Yeah, some of the speculative trades really getting hammered at the moment. And interestingly, we saw a complete about face when it came to the moves in the FX market. We started the day with, well, the Dow at a new record high, and indeed the dollar index on the lower side. Well, actually, the Bloomberg Dollar Index managed to claw back those losses as the Federal Reserve minutes came into play, and we expect a more hawkish Federal Reserve. So the dollar actually goes higher versus, say, the Canadian dollar, which is off 0.4% against it. Interestingly, the euro managed to hold into the green. This as we had more hawkish comments coming from the ECB as well. So maybe a little bit of a tit for tat when it comes for the central bank's perspective. But overall, we saw a lot of, well, some of the gains that we saw in the commodities spectrum just come off as the dollar managed to reclaim some of those losses. The dollar weakness had been helping some of the green in the screen when you look at the commodities. Steel up 1 percentage point. Carol, you called out some of that Chinese data. Iron ore was up 1.5%. Oil up just about barely. It had been up more than a percentage point, but then we sort of see that get hit by a slightly stronger dollar. Natural gas getting a push higher as perhaps some of the weather comes into play as well. Overall, sovereign bonds, a tale of yields spiking higher no matter where you are, Taylor.
Exactly, Caroline. Let's take a look at here in the U.S. Really interesting dynamics going on within the bond market today. Since last Friday, the 2-year yield is up 10 basis points. 10s and 30s are up 20 basis points in just the last 3 days alone. And Romaine, we do this for you. The 10 and the 30-year real yield are now the highest pretty much going back since last summer. And so this nominal lift up that you've seen in yield is not coming from inflation fears, but higher growth expectations. And that is what a less negative, albeit still negative, real yield is telling you.
Yeah, and I mean, look, I mean, this all then plays back into, I mean, we always would joke about fundamentals last year, Taylor, but this is really now a real reassessment now of those fundamentals. And we talk about software stocks. You could put Microsoft up there, but what about you go towards that second tier of companies there? You take a look at the IGV, the main ETF that tracks a lot of these software companies. Not only did it have an awful day, but we should point out that it's now in correction territory. It actually hit correction territory last week. So you started to see some of the bloom come off the rose after the last Fed meeting. So remember, there were a lot of folks that kind of saw this coming. They saw the hawkishness coming out of that last Fed meeting, and that's just accelerated. That ETF now down 14% from its record high here. You see down 5% here on the day. And these are the stocks that are going to hammer. You go through those names in those in that ETF here, and tell me how many of those actually have earnings. You can't even get a PE on some of those names.
All right.
If there's no E.
Right.
There's no E. When the denominator is zero, the math doesn't work out very well.
But look,
for a lot
MBA,
of E manage it.
But for a lot of years, that didn't matter.
Too.
Oh, you do? I didn't know that.
He's getting there. Not his level 4, but his...
So I guess what's interesting at this point, the other thing, okay, we're seeing a recalibration in the market, right? We're just certainly seeing that, and certainly after the FOMC minutes. But I guess one of the questions is growth. We still will have a growing economy, right? It is anticipated that it will slow down. And so we need to kind of understand what is the growth metrics? What does this mean for corporate earnings? And so that's what we're seeing the market adjusting to. Again, I'm going to go to, earnings when we start to get into that. What are we hearing from CEOs? What's the outlook? I still feel like that what we're hearing is there's a fair amount of optimism out there.
Did you see they sold out of those Chevy Silverados, a new EV?
In what, under 20 minutes? Is that
I mean, people are buying
minutes,
stuff.
What do they call it? Revenge buying at the moment. But there's also, at the moment, some revenge coming if you wanted to go out. The services side, I mean, the Grammy Awards, they're postponed. People are having to, Macy's can't be open as long as it wants to be. All these companies are being hit.
How will I know what good music is out there?
Yeah. Go to Vegas. Vegas is open.
I'm all about
That's
the
all you need
outfits.
to know.
There aren't as good enough outfits at CES as there are over at the Grammys.
Yeah.
Okay, let's get back on track. Well done on the outfits, Caroline. But we talk, and I know I mentioned this earlier, some of the strong economic data, the ADP numbers that we got this morning, Tim, all as we really push forward to Friday. There has been a little bit of a breakdown with that correlation, but it does bode well, perhaps maybe for some of the jobs numbers that we're expecting on Friday.
Yeah, we can't read too much into the big beat today, but just the fact that it was a massive beat when it came to ADP. I mean, more than 800,000 jobs reported, and expectations were just over 400,000. So potentially some optimism there. How does that change the picture of how things are looking if the labor market continues to get tighter and we get a really good report on Friday?
I think so. And you start to get some of that data, and that could change things. And I have to go back to something that I think Carol had brought up the last time we had the simulcast on about an hour ago, is some of the commentary that we're getting out of Kashkari, as well as some of the other Fed members. This idea here that they don't seem, or at least they're publicly seeming to be saying that, oh, well, inflation's not all that. It's all going to sort of revert back to normal. But then we hear this discussion they've been having behind closed doors, which seems to suggest they're a little bit more concerned about it than maybe what they've said publicly.
Yeah, certainly those minutes show that they are a lot more concerned, right? And it played out in the markets today. All right, guys, it should make for tomorrow an interesting conversation as well, leading up also to that Friday jobs report. All right, that's going to do it for Beyond the Bell, our comprehensive and cross-platform market wrap coverage on radio, on TV, on YouTube. Join us again, same time, same place tomorrow.
You're listening to Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Interesting day. And so what's the rethink? Recalibration in terms of the markets? What happens tomorrow? Do we see people come in and say, you know what, I like the name. It's a lot cheaper today than it was before the sell-off? Or do we wait to see what happens in the next couple of weeks? Do we kind of level out here a little bit?
425,000. That's what the survey of economists by Bloomberg is saying right now for the change in non-farm payrolls that we get on Friday.
If that's a disappointing report, that will also lead to, I think, another recalibration in terms of Fed think. All right, let's get to world and national news. Over to Nancy Lyons. She's in D.C. Hey, Nance.
Thanks, Carol. Tomorrow marks 1 year since the January 6th insurrection, and today Attorney General Merrick Garland said those involved must be held accountable.
We will follow the facts wherever they lead.
Garland called the ongoing investigation one of the largest and most intensive operations in Justice Department history. He also rejected criticism about the pace of the investigation. He noted more than 5,000 subpoenas and search warrants have been issued. 725 people have been arrested. President Biden will be giving a speech about the anniversary of the insurrection tomorrow. Press Secretary Jen Psaki on what he will say.
The president is going to speak to the truth of what happened, not the lies that some have spread since, and the peril it posed to the rule of law and our system of democratic governance. He will also speak to the work we still need to do to secure and strengthen our democracy and our institutions, to reject the hatred and lies we saw on January 6th and to unite our country.
Psaki says Biden has been clear-eyed, quote, about the threat former President Trump represents to our democracy. Secretary of State Anthony Blinken is addressing the threat still posed by Russia massing along its border with Ukraine.
If Russia nonetheless chooses to escalate, we will respond swiftly. The United States, Germany, and our allies and partners, including at NATO, the European Union, the G7, have been very clear that Russia will face massive consequences.
Russia is claiming Ukraine is the one acting aggressively. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All All right, you are listening to Bloomberg Business Week. That was Nancy Lyons in our DC bureau, Carol Master along with Tim Stenovic in our Interactive Brokers studio. And, I'm thinking about Grammy Awards postponed, mandatory shots. And I mean, there's a lot still going on. And it is a reminder, I think what Charlie Pellet said, go back to those early days of 2020 and things started shutting down. It said to us, we were like, I remember like sports things shutting down.
Yeah.
And we thought, okay.
I was looking at some pictures.
Grammy Awards, though, with the sports like tournaments being shut down, I feel like are maybe a different level.
They're different. I mean, part of it is,
Kids are in school.
Yeah.
Not everybody. Not yours.
Yeah, not mine. Disruption with capital D, right?
Yeah.
But look, you made a good point when I was talking to you during one of the breaks that even though my son is out of school today for one last day because he was exposed last week in, the quarantine period.
Yeah.
For unvaccinated kids is that length. I'm at work, right? And we have childcare, and that's what's important. So yes, it's disruptive, but it's not disruptive to the same extent that it was during lockdowns. And we're lucky. We're lucky we have childcare.
Right.
But
and not everybody can afford.
Right. Oh, absolutely.
That coverage,
and that's
which is a
something
point you always bring up too, which is really smart.
And it's something to keep in mind. And I think like as we hear and learn more and more about, we hear from this from policymakers, from doctors we speak to, and even from investors, Carol, that the market is looking beyond COVID and we're learning to live with it. And I don't like to use that term because I think that it affects a lot of people differently. The immunocompromised, it's certainly different. But the fact is it's a different world than we had in March and April of 2020.
Well, and here's I was sharing with you my sister who has a daughter who's a doctor out on the West Coast and talks about having someone who's a little bit older but very fit, and they're in the ICU on a ventilator. So, and this person was got all the vaccines that were available, and so it's a reminder that it's still difficult, and a story like that makes you maybe stop and pull back again.
It
right?
does, yeah. I hate to hear that.
All right, you're listening to Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World headquarters, I'm Charlie Pellet. Stocks tumbled on a hawkish Fed tone. The Dow, the S&P, NASDAQ all seeing steep losses today, right to the numbers, with the S&P dropping 92 points, closing at session lows, holding just above 4,700, lower today by 1.9%. NASDAQ dropped 522 points, down 3.3%. The Dow Jones Industrial Average was down 392, down 1.1%. 10-year yield right now 1.69%. Equities deep in losses after minutes from the Federal Reserve flagged the chance of earlier and faster interest rate increases. Again, the 10-year worth repeating 1.69%. Spot gold down 0.2%, 18.10 the ounce. West Texas Intermediate crude up 0.2%, 77.17 a barrel. So again, recapping, S&P 500 index down 1.9% today. The Dow down 1.1%. NASDAQ down 3.3%. The NASDAQ 100 index down 3.1%. And that's a Bloomberg Business Flash.
Thank you so much, Charlie Pellet. Well, Tim, you are definitely stoked for this story.
I am. I'm a Strava user.
So tell us about Strava.
Okay, so Strava is it's been around for years, and it's a fitness platform that's mainly used by cyclists and distance runners.
Serious people, though.
Yeah, serious athletes. But, you know, it's still a private company, and it still hasn't IPO'd. And I've been wondering, hey, what's going on with Strava? So I was really happy to read this story from Max Chafkin. He is a features editor for Bloomberg Business Week. By the way, Max is also this. Every time I talk about Max, we got to talk about his Peter Thiel book because it's a fantastic book. So be sure to check that out. He's the author of that new book. Came out just a few.
The Contrarian.
The Contrarian.
Peter Thiel and Silicon Valley's Pursuit of Power.
Yeah, it came out just a few months ago. Max joins us now. He's features editor for Bloomberg Business Week. Max, January 17th. That's the day I have to make it. I have to make it to, right?
Yeah, Quitter's Day. Yeah, thanks for that introduction. Yeah, so Strava, as you said, you know, it's a app that has, you know, really well known in the kind of serious athlete world, although it is, and partly because of the pandemic, I think, has sort of taken off in kind of more casual fitness circles. They've seen, you know, huge user growth over the last couple of years as we report in this story. And of course, besides the pandemic, there is a sort of a cyclical nature to the fitness business where in early January, right about this time, you know, everyone makes these New Year's resolutions. And as I think a lot of people know, New Year's resolutions do not stick very well. Strava, being a tech company, can really, you know, dig into the data and slice and dice it. And they, the CEO told me that basically January 17th, that's the day that where you kind of separate the New Year's resolution quitters from the ones who stick it out for a long period of time. That's when most of the sort of traffic is going to fall off. But he said, kind of on the bright side, those who do make it past that January 17th date, at least on Strava, seem to stick around for a lot longer, seem to kind of form more permanent fitness habits.
Well, and I guess they've had a test too. Like, you know, we talk about Peloton so much, right? Everybody who was leaning in big time and buying up Pelotons during the pandemic when they couldn't go to gyms and were buying stuff for their home. But we saw, you know, as the world reopened, of course, we're in a little bit of a falling back again because of Omicron. But nonetheless, you know, we saw Peloton then under a lot of pressure for a lot of different reasons, but also people kind of going back out into the world and being able to work outside, you know, work out outside their homes. Has Strava seen the same thing? Like, what happened to it during the pandemic, and has it been able to hold on to users?
Absolutely, yeah. So Strava is another one of these pandemic boom businesses where, you know, stay-at-home orders happen, and there are all these things that people were wanted to do, but they were unable to do, so they looked for digital alternatives. You saw a lot of people, you know, they couldn't go to the gym, so they bought Peloton bikes. Some of those people, you know, downloaded Strava or signed up for a subscription. There's a sort of paid version of it where you get training plans and these competitive leaderboards that are very popular, especially with runners and cyclists. And anyway, so they saw this kind of bump in traffic during the stay-at-home period, just like Peloton, just like many businesses. But as I talk about in this piece, the traffic actually didn't really go away. And you know, I talked to, you know, Strava CEO about that, and his view is basically that, you know, Strava, you know, unlike some of these other services that really were, you know, primarily useful as kind of indoor stay-at-home type things, you know, of course, I'm sure Peloton now, it's cold outside and everything. I'm sure people are kind of maybe rediscovering their bikes. But Strava, works just as well outdoors and indoors. So kind of an interesting thing that happened, we saw all these big-time races. New York City Marathon went virtual in 2020, and they encouraged people, they had a partnership with Strava, encouraged people to record a virtual marathon, a virtual 26-mile run in the app. That's, of course, great for Strava as a business. When things reopened this past summer in 2021, you still saw a ton of Strava usage, just people using the app outdoors to track their, outdoor runs, outdoor bike rides. Something like half the field at the New York Marathon recorded their race on Strava, and similar data from, the London Marathon, I believe the Boston Marathon as well. So you've kind of seen, instead of this kind of boom and bust thing, just a continued growth. And it's not clear, we don't know how long that's going to last. But Strava's CEO, Michael Horvath, is basically saying, we're not seeing these same headwinds as these other players.
Hey, Max, what did you learn from Michael Horvath about what comes next for the company? Because as I mentioned, this is a company that, is more than a decade old at this point. I've certainly been using it for probably almost that long. And it's still a privately held company. What's the future hold?
Big news here. So Horvath talked a little bit to me about product stuff. They're trying to add, more sort of virtual challenges, try to build out the club aspect of it. So, you could, in other words, like have your friends on Strava or a running club. And that has potential business implications because they'd be able to get people coming back more and more often. Most significantly, he talked about revenue, which is something the company has never done before. So he told me they took in about $100 million in 2020. Revenue, he said, grew 68% in 2021, and he said the company was profitable last year, 2020 and 2021. He didn't comment on the IPO thing, but, as we know from following tech companies, there's kind of a trajectory here where they start talking about revenue, they start making these signs of kind of courting the investor class, and it's kind of a signal that's in the offing. So I would think, they're starting to move in that direction, although Horvath said, it's not something that's in their immediate future. That said, they have also been adding to their board of directors. They just added a CFO, Lily Yang, who's from Pinterest, the tech company that just went public, and they've just added a couple of board members, from other public companies. So it definitely seems like they're at least trying to get the business ready for that kind of thing, but, who knows how quick they'll be to, file.
What a great story. Yeah, pretty interesting app. Do you use it, Max?
Yes, I am a big Strava user.
Okay.
And the great thing about Strava is that it's...
We got to run. Max Chapkin.
But I'll follow him on Strava.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
You are listening to Bloomberg Business Week on this Wednesday, January 5th. Carol Masser, Tim Stanovic in our Interactive Broker Studio. Looking forward to this next guest.
Yeah, Julia Hart, the co-owner and CEO of Elite World Group, is going to be joining us. They're transforming from a talent agency to a media powerhouse. We're going to talk to her a little bit about something called the metaverse.
The metaverse. I'm really looking forward to this. First up, though, let's get back to Charlie Pellet. It was a really significant trading day. Lots going on. Hey, Charlie.
Indeed. From the metaverse to reality, absolute reality here. Third trading day of the new year. Steep losses across the board, right to the numbers. That's what you want to know. We'll give you the why in a moment here. S&P dropping 93 points, down 1.9%. NASDAQ plunged 522 points, down 3.3%. NASDAQ 100 index down 3.1%. Dow Industrials down 392, a drop there of 1.1%. 10-year yield 1.69%. Equities deep in losses after minutes from the Federal Reserve flagged the chance of earlier and faster interest rate increases. Spot gold down 0.3%, 18.09 the ounce. West Texas Intermediate crude up 0.2, 77.14 a barrel. And Bitcoin now down by 5.4%. 43,727 right now on Bitcoin. 10-year worth repeating the yield there, 1.69%. Steep losses across the board today for U.S. equities. Sandy Villery is portfolio manager at Villery & Company. He was our guest right here on Bloomberg Business Week.
I think the major thing going on today, is definitely the Fed minutes and a Fed that's, maybe more hawkish than people originally thought. And that's sort of, you can see that playing through with growth versus value indexes and everything from, oil to the financial sectors, just all moving in lockstep.
Yum Brands confirms its KFC restaurants will start selling plant-based chicken on January 10th. Beyond Fried Chicken will be offered for a limited time at KFC restaurants across the country. BTCS, it's a small NASDAQ-listed blockchain technology-focused company. It says it will be the first to offer investors the option to get their dividends issued in Bitcoin. Today, shares of that company on a down day for the rest of the market, shares of BTCS surged 43.89%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So our next guest, Julia Hart, she is co-owner and CEO of the talent representation company, Elite World Group. They rep some 5,400 talent globally. The clients include Tiffany, Chanel, Prada, Burberry, a lot more of names that you would know. She, by the way, is also the subject of a Netflix series. It's called My Unorthodox Life, which premiered this past summer. We are delighted to have her on the phone in New York City. Julia, great to have you here with Tim and myself. How are you?
Here.
Well, it's great to have you here with us. Tell us a little bit about, for those who might not be familiar with your company, although it was fun kind of reading in for you because I remember Elite Models, very well known in the modeling industry, but you are a bunch of companies. Tell us about your company, the transformation that you've been going through.
So the only reason I took over the company is because I realized with the advent of social media, we are at the forefront of changing the way that people communicate and how people advertise. Because if you think about it, social media advertising by definition has to be more honest, right? Julia Hart, who's 5 feet tall and can barely lift her handbag, is not going to be doing an ad for a workout session with weights.
You might in the metaverse, though, but we can talk about that later.
So what I understood is that if I utilize if you think of the talent, instead of thinking of them as athletes or actors or models, to me, those are all platforms, whether it's a runway, a tennis court, a football stadium, a movie set, it doesn't matter. We utilize that and put the power in their hands. It's this massive shift in the power dynamic and this vast democratization of fashion because for the first time, it's not the talent having to run and the hope that someone chooses them, that a creative director likes them, that a photographer or videographer takes them under their wing, that some editor of a fancy magazine wants to have a photo of them. Their career is in their hands. And so what we're doing is we're helping them create themselves into brands and businesses. We utilize the time that they're in the public eye to build them into brands so that far past the time they're on whatever platform they started from, whether it's a tennis court or a runway or a football stadium, their audiences become so accustomed to coming to them. They will continue. They are the media. They have the audience. Our aggregated viewership has now reached 2.2 billion people.
Yeah.
Hey, Julia, help us understand the connection to technology here, because you use terms like platform and audience, and I think, influencer, right? I think Instagram, I think YouTube. How is that married into this?
Well, again, social media, the way that I looked at it when I took over, because to me, the modeling industry was not interesting at all. It felt like the flip side of the world that I came from. The only reason I took it over is because I realized that I have the possibility to make an army of financially independent women by utilizing their social media channels as actual networks. Think about it.
But what I'm wondering too, and I look at how my daughter, 18, how she shops, what she looks at, it's all through a lot of Instagram. It's all social media. It's very different from how I shopped. But I do wonder, not everybody's going to be, we did a story earlier about Jessica Simpson, and kind of built an incredible brand, got away from her, and she just got it back, and she's trying to rebuild it. But not everybody will have success. Or are you saying that everybody will have success on social media?
Great question. Of course, everyone will not have success. So there's what I would say two ingredients, what we provide and what the talent provides. So when I thought of talent as media, and I realized that if I literally treat them as media, they have the power. They're not waiting for the casting agents and the creative directors. They are now being chased by the casting agents and creative directors because they bring the audience, right? So when you can communicate, I always tell every talent, find your angel product. And it doesn't actually mean it has to be a physical thing. It means something that you are truthfully passionate about. That people know when they come on your website, on your Instagram page or your TikTok or whatever, they're going to learn more about X. If you love the environment, talk about the environment. Show all of the different environmental, places that you belong with and what you're doing. Let people understand who you are. And that's the first time in history that tennis players and models and, athletes can say who they are, and it's not just about what they do. The second part of that...
Wait, you know what, Julie, you got to hang on for a second. We've got to do a little bit of news, but we're going to come back and continue with this. So hold that second point in that thought, if you could, for just a moment. We're going to come back to Julia Hart. She's co-owner, CEO of Elite World Group. She is joining us on the phone on this Wednesday in New York City.
Well, let's head from New York to Washington, D.C. to check in with Nancy Lyons for the latest world and national news. Hey there, Nance.
Thanks, Tim. On this, the eve of the January 6th insurrection, Attorney General Merrick Garland is providing an update on the investigation into what happened.
The Justice Department remains committed to holding all January 6 perpetrators at any level accountable under law, whether they were present that day or were otherwise criminally responsible for the assault on our democracy. We will follow the facts wherever they lead.
Garland says they've charged more than 725 people in connection with the riot. 325 face felonies. Omicron is spreading fast across the country. CDC Director Dr. Rochelle Walensky says the 7-day average of cases is up by 98% from last week, and hospital admissions are up by 63%.
Based on CDC genomic sequencing, we now estimate that Omicron represents about 95% of cases in the country, and Delta represents the remaining 5% of the cases.
Walensky says the current coronavirus tests are not authorized to be used to test out of isolation. She says they do not measure how transmissible someone is based on a positive or negative result. Philadelphia authorities say 13 people died, including 7 children, in an early morning apartment building fire. Philadelphia Mayor Jim Kenney calls it tragic.
Please keep all these folks, and especially these children, in your prayers. Losing so many kids is just devastating.
Kenney calls it one of the worst days in the city's history. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week. Carol Massler, Tim Stenovic here in our Interactive Broker studio. I'm so hungry I could eat my pen. I'm just going to. Tim and I are both really hungry right now.
Don't do it because it would make a mess. It would just get ink everywhere.
I'm going up to the food court right after we're done.
Hey, one fun story that got our attention this afternoon has to do with the Disney duo. Some familiar names to anyone who follows media closely or perhaps even follows TikTok closely. Former Walt Disney executives Kevin Mayer and Tom Staggs, they've acquired a minority stake in Westbrook Inc. That's the entertainment company founded by the Hollywood power couple Will and Jada Pinkett Smith.
These are mega power players.
Yeah.
What's interesting too, Tom Staggs used to head parks and the cruise ship part of the company, and I'm trying to remember what Kevin Mayer did. Was he part of the digital? I think he was Disney Plus.
Well,
I think early on, wasn't he?
He was direct to consumer. I think he did.
Okay, and international.
Yeah, and then.
But he did start back in 2020 running Disney Plus.
That's direct to consumer.
So early
yeah, that
in
was
it,
big.
Right, exactly.
But he then joined TikTok.
That's right.
Very briefly.
I remember when he left because it was like.
It was a big deal. Well, he didn't get the top job as CEO.
Right.
So
there was quite the race on for that.
Hey, this is not about Disney, Carol. The story.
Sorry. Okay.
I see it. Hey, but
it's so easy when it's Disney related.
I know. I guess it is about Disney because they're both formerly from Disney, but
they're interesting players. Okay. Anyway,
they are.
So let's talk about.
You're absolutely right. And hey, you know what? They're teaming up with and they're building this new media company. They're getting money from a small firm known as Blackstone.
Blackstone?
Yeah, not a small firm at all. The two have been looking to invest in up-and-coming entertainment companies with big online presence and creative executives who are going to stay around to manage them.
What's interesting too is, and I like what Will and Jada Pinkett Smith are doing. Their company is Westbrook. It's an entertainment company. You're seeing increasingly actors and actresses. You saw it with Reese Witherspoon.
Hello Sunshine, $900 million.
Exactly, going out and creating content, creating vehicles for themselves and others, and creating really valuable properties in an area where there's so much streaming and everybody wants screaming for content.
Yeah, it's really cool.
All right. Anyway, it all goes back to Disney, though. It seems like this is a Bloomberg.
headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. The NASDAQ 100 index had its worst day since March, all about the Fed minutes. Stocks retreated further from a stretch of records after minutes from the Federal Reserve's most recent meeting showed that a strengthening economy and elevated inflation could lead to earlier and faster interest rate increases. NASDAQ 100 index down today by 3.1%. The NASDAQ Composite Index down 3.3%. NASDAQ plunged 522 points. The S&P was down 93, a drop there of 1.9%. Dow Industrials down 392, a drop of 1.1%. 10-year down 15.30 seconds. 10-year yield 1.69%. Spot gold down 0.3%. 18.10 the ounce. Bitcoin now down 5.3%. 43,782. West Texas Intermediate crude up 0.3%. 77.21 a barrel. Australia's border force says tennis star Novak Djokovic's Australian visa has been canceled. Djokovic was challenged by Prime Minister Scott Morrison to prove why he can't be vaccinated. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. I want to get back to our guest. You're listening to Bloomberg Business Week. Carol Masser, Tim Stenovic here in our Interactive Broker studio. We're catching up with Julia Hart, co-owner and CEO of the talent representation company Elite World Group, and she is still with us on the phone in New York City. I mean, you work with some really fascinating people. Tell us a little bit about, though, we want to talk about the metaverse.
Yeah.
What do you see? Because I think, Julia, safe to say, you know, we've all been obsessed with what Facebook, or formerly known as Facebook, you know, Meta is up to, and how this will fit into our world more broadly. How do you see it in terms of talent and branding? Because Tim and I recently caught up with our Pursuits team and Chris Rouser, and we talked about the high-end fashion houses that you work with that are selling fashion NFTs for thousands of dollars. So our world is evolving.
Indeed it is. And honestly, to me, the metaverse and avatars, way before, you know, Facebook called itself Meta, right? In 2019, I started building my team of avatar creators and metaverse experts. I started literally building the whole concept of metaverse and avatars a month and a half after I took over as CEO, because to me, it was an evolution of what's going on in the digital space. And by that I mean, think about what is the most watched show on NBC, right? The most watched show on NBC gets around 3-4 million viewers. My talent gets 50 million viewers while they're mowing their lawn. They have the audience. So the first thing was to give them longevity. And by giving them longevity, I mean turning them into brands. And we did that by bringing in-house what networks have. Writers, producers, directors, filmographers to help our talent craft their stories.
It's not casual,
So
right?
gives
I mean, that's the one thing that I think is interesting. Tim and I talk about it even with our social media. I mean, it can be casual and it can catch on.
It's so much work.
But it's a lot of work. It's a
lot of work.
Intentional.
But it has to be real. It has to be true to you. And so that enabled me to give my talent longevity. But the goal has been to give them eternity and immortality. And that's what these avatars do. So just, you know, I mean, we've been working on this for the past 2 years, 2.5 years. We have created the most hyper-realistic avatars that exist today. If you take a look at ours and you measure them against anyone, Facebook, Google, all these companies that people are talking about with such excitement, ours are incomparable.
Where can we see some of the stuff that you guys are doing?
So we can send you the, we did a Jasmine video because we've done 2 things so far, right? We've got the Steve Madden campaign that we did, but that wasn't as hyper-realistic because they wanted to reinvent their old campaign with the bobblehead. So that needed to be that, you know, plus. And the most incredible thing I have to tell you, and they've never seen this, you guys probably know better than I do. Have you ever heard of the earnings report that attributes their massive growth in earnings to a sales campaign within their quarter earnings report? because that's what Steve Madden did. In their third quarter earning report, openly, they attributed the connectivity with a younger audience and an increase in sales and web traffic to our campaign. A 20% increase on launch day, and the highest earnings the company has ever had in its entire history. We concepted, cast, directed, produced the Steve Madden campaign, and we've got avatars who can show you products.
But the avatars, so the avatars though, they're not necessarily experienced. They're not experienced by consumers in what is known as the metaverse, right? The Steve Madden verse, right? These avatars are still viewed in a traditional way. You know, Carol just sent me a YouTube video, so I can
exist in any platform.
But there aren't the people yet in those platforms to actually make it worthwhile, right?
No, we built them. In fact, I can't say the names of the companies that we are currently doing projects for, because of course we were going to announce them when the project is complete. But we've got a major fashion brand that we're building an entire virtual shopping experience where you will have an avatar who is a salesperson. We've been working with this incredible company that has a literal no-brainer scanning technology. So all you have to do, it's literally so simple. You scan your body, it puts you into the metaverse, and you can try on clothing, handbags. You can create your own. You can choose things, and it's all virtual. So the metaverse is here now. Like for example, Jasmine Saunders, we put her in a metaverse. And the beauty of what we're doing as opposed to traditional, right? But think about video games. They could only exist within the framework of that video game. Our avatars can exist in every imaginable way, whether it's a shopping experience where we create an entire interactive e-commerce metaverse website where people can literally put themselves in there and try things on and see what they look like and communicate.
So Julia, what they...
You could sing karaoke with your favorite, singer.
So eventually...
It's an endless amount of opportunity.
But what's
happening right now?
Right, but so this is how people can actually then buy product, right? Because I know some of the stuff we did with Pursuits and the NFT idea was, you're not necessarily going to own an actual physical object, but you just are kind of playing in this virtual world. Then you can have your own avatar and you can put on the NFT or whatever that you buy.
Both are great for me. I mean, I'll do it all, whether it's you want to keep it in the realm of the metaverse, fantastic. You want it to help it create a purchase, wonderful. You tell me what your goal is as a company, and I ensure you that we will get it done.
We've only got about 25 seconds left here. I know with Steve Madden, though, when you guys did this, they saw a pop in sales. Is that correct? Just quickly.
Yes. As I mentioned, they mentioned us in their third quarter earnings report, and they attributed it's the highest earnings the company has ever had in its history with our campaign and a 20% increase on launch day, which was really, really exciting. And then, of course, we've got the partnership with Tommy Hilfiger. So we're going to be doing this incredible interactive virtual fashion show. It's going to be amazing.
Julia, thank you so much. Julia Hart, she's co-owner, CEO of Elite World Group, joining us on the phone in New York. Just want to remind everybody, because it was an interesting day, and the Fed minutes, those FOMC minutes, flagging chance of an earlier, faster rate hiking cycle. As a result, we saw equities sell off today, Tim.
Yeah, the Dow finishing the day down by more than 1%. The S&P 500 down by 1.94%. The NASDAQ, though, down 3.3%.
And the other flip side, of course, is what happened along interest rates. And we saw rates moving up all along the yield curve. That 10-year note finishing with a yield of 1.70. That 2-year note with a yield of 0.82. Definitely a recalibration. I'm curious what tomorrow will bring.
Yeah, so am I. Really curious about tomorrow, especially for those high-flying tech names.
Sound On with Joe Matthew coming up next. For the Business Week team, have a great evening.